Hearty good morning, ladies and gentlemen, and a warm welcome to all of you to the VCCircle Technology Investment Summit 2021. I am Kavya R. Chavali, and I wholeheartedly welcome each one of you who has joined us this morning to be a part of a very pertinent conversation. I do believe that, as you can notice, I'm hosting the show from the comfort of my home studio, staying safe. So I hope all of you are absolutely safe and staying healthy as well. While I do believe that we are also riding the second wave of the lockdown, I also believe that we are all connected thanks to technology. And technology as a sector has accounted for nearly half of all the private investments by volume and attracted capital worth around $51 billion, or over a fifth of the total private capital flow in India over the last decade. Now, to gauge how tech companies are firming up their strategies for the next leg of their evolution, finding new pockets of demand away from the US and Europe, rethinking their capital needs and balancing organic growth with inorganic expansion to achieve better scale, here we are at the debut edition of the Technology Investment Summit, albeit on a virtual platform. Ladies and gentlemen, as well as all of our attendees, let me inform you that our growth partner is Gaja Capital. And once again, we thank you all for joining us to be a part of a very relevant conversation. Now, as we talk about conversations, let me inform you that we're actually live on our website, VCCircle.com, techinvestmentsummit.vccevents.com, the Mosaic Digital Facebook and LinkedIn pages. So while all of you are joining us from the relevant platforms, we being live, of course, on Mosaic Digital Facebook and LinkedIn pages, one thing that I would definitely want to inform you all is during the panel discussion, after our panelists do share their thoughts, please do also keep sharing your questions through these pages. In fact, all you got to do is we're going to take the audience questions on the Mosaic Digital Facebook and LinkedIn pages. But please do share your questions because as and when time permits, the moderator as well as the panelists will be more than happy to answer if any queries at your end. So please do look forward to that. At the same time, please do keep tweeting using the hashtag VCCTechSummit. I repeat, hashtag VCCTechSummit. All that you get to experience here, all the insights that you gather from our panelists and from our speakers, please keep tweeting using hashtag VCCTechSummit. On that note, it's also time to set the tone for the program, to set the tone for the entire theme of the program and what to look forward to, for which I'd like to invite on the main screen. We have with us Mr. Jaideep Mehta, who's the Chief Executive Officer of Mosaic Digital and Head Mint. In fact, having joined the company in 2017 to set the company on a new accelerated growth path, he is an advisor to CEOs and business leaders of investment and tech ecosystem. From macroeconomic trends to technology disruptions and market and industry analysis, he has blogged, written, and presented on a wide range of topics. Now, prior to his current role, he was also Managing Director, IDC India and South Asia. And under his leadership, IDC India was conferred the CIO Choice Award for IT Advisor of the Year 3 years consecutively, which is 2014, 15, and 16. Jaideep has also been awarded the Patrick J. McGovern IDC Entrepreneur of the Year 2015 for consistent excellence in leading the South Asia team to success, and Leadership Award for contribution to market research by the World Marketing Congress in 2014. So well, on that note, while I've already introduced our first important speaker to all of you to set the tone, it is only befitting that we gather some insights from none other than Mr. Jaideep Mehta. So on that note, Jaideep, a warm welcome to you, and it's always a delight to hear your insights and your thoughts. Over to you.
Thank you, Kavya, and good morning to all our guests, attendees, and speakers. It's my pleasure to open this event during this rather grim time. But as you'll see, that through thick and thin, the tech sector continues to rock and roll on. And really what I'll be doing is just sharing a few perspectives with you from our research, which we do in our Edge team, which you can find on VCCedge.com. And also some of the coverage that we have both across, VCCircle and TechCircle, as well as our, other family of newspapers, which is, of course, the Mint and livemint.com. Thank you all for joining, as I said, and I'll just share my screen and just present a few slides to set the tone for the event here. Just give me 1 second. There we go. All right. Okay. Right. So just quickly going through some of these. So, in our research, what we found is that, underlying the continued boom in the tech sector, whether it be across IT services companies or some of the more new age companies, there are new technologies at work, and we've clubbed them into what we call the Fantastic Five. Of course, the unfortunate COVID era has thrust upon human civilization the whole notion of work from anywhere and created a whole buzz around the future of work. And within that, there's the whole concept of the future workforce. Cloud now absolutely establishes itself as the infrastructure for the digital age. There are various flavors of cloud technologies, and investors are finding a lot of value across all of those, whether they be public cloud platforms or private cloud companies, or indeed a whole bunch of other companies which surround the core cloud ecosystem. We find that the Internet of Things, or IoT, is pervading across healthcare, across manufacturing, and indeed the government's push around smart cities is going to really create a huge tailwind for IoT in India. Already has done, actually. We're seeing, as people are working remotely, as we do more and more of our banking online, as we do put more and more of our health records online, next generation security is becoming more and more of a common parlance for all of us, and huge investments going in there as well, a lot of value being created. Indian companies emerging as well, I guess some prominent ones already listed, such as QuickHeal and others. And the whole notion of artificial intelligence, of course, always controversial, but very clear that machine learning has taken hold as a stepping stone into AI for the future. And around the masses of data which are being generated by IoT platforms, by mobility platforms, by customer engagement platforms, and so on, more and more sophisticated analytics engines are coming into play. And we find companies such as Fractal, and we are pleased to have their founder today as one of our speakers, generating a tremendous amount of value there as well. So we'll be looking at a whole bunch of sort of issues and topics today as we go through. But keep in mind that these are some of the foundational technologies which are powering up the next wave of value. And what amazing value it is. I mean, we've all been seeing the consumer internet companies, the ed tech companies, SaaS companies really gaining a lot of momentum, especially in the past few weeks and months. But the IT services companies aren't actually far behind. And those of you who may be following my blogs or have heard me earlier would have heard me say that the IT services sector is perhaps the sector which has delivered alpha or market-beating growth and returns the longest amongst any sector of the economy. I mean, since the early 90s and through till today, investors in the public markets or indeed private equity investors covet IT services assets in their portfolios, and they have rarely failed to perform. And there's some examples over there, and I've put in 2 or 3 different types of examples there. One, where Chris Capital's portfolio company Infogain actually acquired Absolute Data recently, which is another Gurgaon-based company in the analytics space. And of course, then Baring bought out NIIT's founders and then made NIIT Tech into Coforge as a rebranding exercise. And as Coforge, they've been powering ahead and actually been, again, more and more acquisitions, including one very recently. And fresh from the press, Carlyle emerges as a sole bidder for Blackstone-owned Emphasis. So one private equity having bought out Emphasis, now actually selling it onwards to another firm after creating significant value in a fairly short period of time, and this was reported on TechCircle itself. So various flavors in which investors are driving value from IT services, but the new age companies are not to be left behind. And today we have a couple of speakers from Vela Capital who we are very fortunate also to have as our partners for this platform. And they recently led a round into Lead Squared, which is a 30 million plus round. Tiger Global looking to invest in SaaS firms, and they've been again moving aggressively as they look for new opportunities in India. And very recently, again reported in TechCircle, and I'm sure other news platforms as well. Unifor, a very interesting company originally out of IIT Madras, raised $140 million of Series D capital. They are in the sort of voice analytics and associated analytics spaces. So they're a mix of analytics and AI and doing very, very interesting things indeed. So action both in the so-called traditional IT sector, but also in the new age IT sector. And there is a clear transition which is happening, which is the sort of point that I'm looking to make here. Looking at it from a slightly longer term perspective, the interesting thing here to see is that, both from an investments and exits perspective, it's been a fairly active sector. And of course, 2020 was a challenging one, especially for exits, though it's fair to say that the exit challenges kind of started before COVID did. But it's equally interesting to see that through the COVID era, actually tech sector investments stayed firm. And not just stayed firm, but actually there was a huge spike in terms of the funding which actually went into the sector last year. And some key deals from the first quarter of this year there. Of course, Q1 2021, we'll see how it goes. But we think that given the fact that the key markets for both SaaS and IT companies, IT services companies, which is the US, UK, Western Europe, are now starting to really emerge out of their COVID waves and COVID crises with large-scale vaccinations and so on. It's already reflecting in the stock prices of the listed companies, and we think that it's going to be a fairly interesting year. From an acquisitions perspective as well, it was a very acquisitive time last year. The large IT services companies especially continue to acquire a lot of the smaller rivals and specialist companies in the Western geographies. And through that, they look to build new front-end capabilities, new consulting capabilities, perhaps new technology capabilities. And we see that happening. And again, a trend that we see there is that the companies are getting more and more confident. So the ticket sizes of these deals continue to sort of climb. And very recently, of course, there was an acquisition by Wipro, but there's been so many others as well. So that's just what I wanted to leave behind. So last year it's interesting to see that the value of the deals went from 6 billion to almost 14 billion. So that's a tremendous rise, and especially given the fact that last year was COVID across the world. So the conclusion I can draw from this is that both PE firms doing buyouts as well as corporations acquiring actually took a longer term view and took advantage of possibly cheaper pricing in the crisis zone to actually up their investments and their acquisitions, which is an interesting trend. And finally, looking at some of the new age tech companies and the SaaS companies, again we see that the volume of interest has been going up, and especially last year. I think last year it's safe to say was the breakout year for SaaS, most definitely. Tremendous increase in the number of deals and also in, of course, the quantum of investment. So it's been a mix of early and later stage deals because this sector is still, I would say, in creation and formation mode. And indeed, new business models are emerging even within SaaS. The latest one that we see is outcome-based pricing for SaaS. So we saw per month per user, then we saw sort of volume-based pricing based on number of transactions, and now we're starting to see also value-based pricing in terms of the outcomes that the companies are driving. Oh, so sorry. So that's just a few kind of points I wanted to make. But again, last year, as relative to 2019, the investment value went up from 1.8 to almost $3.27 billion there. So a tremendous rise in interest in new age and SaaS companies. And I have no doubt that as we go through this year, this number is going to go further up. And already in Q1, we are approaching about about $1 billion. So it's going to be an exciting time, and a lot of great companies coming through, and so on. So just to conclude my opening remarks, I think we are privileged to have the support of CEOs and industry leaders from across the spectrum, and we'll be looking at 3 dimensions of the industry today, right? So really, the opening panel is going to examine the search for alpha. The whole notion of value creation and how that's working out for both mid to large scale IT firms, but also for SaaS companies. And we have two renowned CEOs, investors. You can see there's a fabulous panel right there. And thank you to all of you folks for joining us. I'd seen VA earlier. I haven't met you in years, VA, but very, very pleased to have you with us. And Shrikar as well as Imran, Akshat, and Nilesh. Thank you so much for joining us here. This panel is going to be followed by an examination of some of the newer sectors, security, analytics, AI, and what that means. And Ranjini will be moderating this one. We've got, again, you can see some fabulous speakers there. Thank you for taking time out for us, folks. And finally, my favorite kind of theme for the tech sector really is, the hidden gems in the Indian ecosystem are really what I think are the SaaS companies and the B2B players. So while the consumer internet companies hog the limelight with their phenomenal growth and unbelievable value creation that we've seen in the manifestation of unicorns recently, but these companies as well are delivering some really amazing returns for investors and building world-class businesses which will compete for years in the future. And so that's where we'll be sort of closing the discussion. So that's me done. Thank you very much for your time, folks. And I hope that, as always, we keep our brand promise to you, which is always around, the idea is to always give you food for thought and to be able to really take you to a new frontier of thinking, okay, to give you some decision making to do tomorrow morning when you go back to work, as it were. So with that, I conclude my opening remarks. Thank you very much for your time, and I'll hand back to you, Kavya.
Thank you very much, Jaideep, for highlighting all the key topics that are in store for our members of the audience, all of our attendees. And thank you so much for also sharing your insights in the form of the topics that are about to get started in the form of panel discussions. Thank you once again, Jaideep. With that, ladies and gentlemen, all of our attendees, let me remind you all that we are live on LinkedIn as well as Facebook, which is why I'm going to urge you all to please share your questions on our Mosaic Digital Facebook and LinkedIn pages, because we're about to get started with the panel discussions, and as and when the time permits, we'll have the panelists also answer your questions. So on that note, as we had initially discussed with regard to the first topic, yes, we are all set to actually search for the alpha, especially when we try to look at how can large-scale IT firms and Indian SaaS companies generate alpha for the investors. Now, our growth partner is Gaja Capital, also our session partner for the first panel discussion. Let me quickly introduce our set of panelists who are joining us one after the other. On the main screen, we have with us P. Shrikar Reddy, Managing Director and CEO, Sonata Software Limited, and he's been with Sonata since 1986 and is pivotal in building Sonata as a trusted and a reliable IT solutions company. He's also set Sonata on a new growth path with a unique proprietary approach to creating digital businesses called Platformation. So yes, on that note, let me also move forward and introduce our next panelist. We have with us Virender Agarwal, CEO, Ramco Systems. When we look at disruption-led innovation, that indeed is the new status quo, and globally new age organizations are redefining the rules of the game. And this has also been the anchor for Virender Agarwal, aka VA, who has been leading business transformations through technology for 30 plus years. And as the CEO of Ramco Systems, he continues to drive this philosophy, taking the organization forward into the frontiers of emerging digital technologies. Let me also move forward and invite our next esteemed panelist. We have with us Akshat Babbar, who's a vice president with Chris Capital. In fact, he's been with Chris Capital since 2011 and leads the investments in IT and business service sector. A pioneering leader that he's known for in the industry. He was also previously with Goldman Sachs on the equity sales desk. We're also joined by Imran Jafar, who is a managing partner of Gaja Capital. In fact, as we all know, Gaja is India's leading mid-market growth capital firm, and Gaja's aim is to help create India's next generation of market leaders in sectors such as education, consumer, financial services, healthcare, and SaaS. Imran, in fact, comes with over 21 years of experience in private equity, pharmaceuticals, and technology services. And prior to Gaja, he's also worked in a variety of roles, increasing responsibility in document and Wipro Technologies. Let me also quickly invite our final panelist. We have thus Nilesh Patel, who's the CEO with Lead Squared. And Nilesh is in fact focused on helping businesses in high velocity, high volume sales to improve their sales execution and increase sales efficiencies. In fact, he's on a mission to build Lead Squared as software partner of choice for sales execution for businesses, and he firmly believes that an awesome product and great customer service are both central to making that happen. Now, one person who's actually responsible in extracting all the perspectives from our panelists, I'm going to also quickly introduce our session moderator. We have the Payal Ganguly, who's a principal correspondent with TechCircle. In fact, she writes about startups and technology, apart from covering related policy. And she's been with TechCircle for over 2 years and has been covering the space since 2011. So on that note, firstly, a warm welcome to all of our panelists. It's a beautiful, bright morning indeed, and we're looking forward to some bright insights from all of you. I'm going to hand over the proceedings to Payal. Payal, over to you then.
Thank you so much, Kavya, and welcome to the session of Tech Investment Summit, everybody. For a brief introduction, the last year has been eventful for businesses which have been supporting digital transformation. Companies which offer products and services for the digital transformation journey have seen solid and sustained growth with global demand. The growth is likely to continue, and add to that the momentum of investment in software as a service or SaaS, with a handful of Indian or India-born companies in the sector poised to also make their debut in the US market. So to discuss how the country's mid-large scale IT firms and Indian SaaS companies can capture this demand to become front runners, we have our eminent panel of speakers, and we'll cut to the chase with this. My first question is for all the companies, the representatives, the CEOs. What are the key challenges in building a global software brand out of India? Also, when we talk about the IT services and IT sector, what are the challenges to scale these products globally? So can we start with Virender, if you could put across your thoughts on this?
Yeah, sure. I think the advent of cloud makes it very possible for anybody sitting anywhere to build a global company and a global business. To that extent, I think it's been a great enabler for the Indian companies. The only thing is that you need to test out your solution at scale, and if it gets tested in India, it becomes a validation, and that can be rolled out across the world. The expectation globally is of quality is much more, and the fewer number of clicks and the ease of use and so on, so for the self-installing application software. But pretty much I think there is no reason why Indian startups or Indian SaaS companies should not aim global, and actually they are taking the world's largest companies straight ahead right now. And some of them are Silicon Valley based, some of them are India based, and some of them have engineering teams in India, but the CEOs and the team sitting in US. So I will call them all under the single umbrella of Indian-led entities. And I see no reason why they should not be global. So I think we are ripe for going global and taking a rightful space in the world, and maybe have our own 10 cents and Alibabas coming in from here very soon.
Got it. And tossing it to Shrikar, do you have something to add, Shrikar, in your journey? Like, how easy or difficult has it been to scale the product?
Yeah, thank you. Good morning, all. Glad to be here, and glad to share the platform with an esteemed group of panelists. Yeah, it's been a long journey for the Indian IT services industry itself. I think started somewhere in the mid 80s when I started, and obviously you had to build the value prop up from a purely cost arbitrage to quality process to now actually doing digital transformation. But I think overall the industry, I think, has gone through the change and continue to adapt themselves and continue to be at the leading edge of being able to offer these value propositions to companies and customers globally. Obviously, it's not an easy journey. It's been a long, arduous journey of, actually to fight the whole India brand, because when you start offering technology, I mean, and what the legacy you had with the quality which came from India, you had to beat that, and before you actually built a brand of you can actually depend on us to deliver world class services, and now obviously that's happened. But the whole thing is about who you are, where you are, and what you want to focus on. I mean, you can be a large player who offers a very large value prop. Otherwise, for mid-sized companies or companies who want to start up, I think you need to be extremely clear about your segmentation, your value prop. You got to be highly differentiated. You can't be be all and end all to everybody for everything. I mean, otherwise it will be a huge challenge for anybody to continue to be of sense and meaning to global clients.
Got it. Thanks for that, Shrikar. And Nilesh, would you like to weigh in on how similar or different your journey is from, say, Shrikar and Virender's, and what are the learnings you have taken from them to scale your company?
I think coming from IT services did not help in building a product business, so that much I can tell you, because it requires a little bit different mindset, and I think that was unlearning / new learning which happened for us and the founding team. I think fundamentally, you asked about the global challenge. I think over last 10 years or so, the ingredients of what is required to build good SaaS businesses are sort of coming in place. Fundamentally, you need product development talent. So I think because a lot of companies have built so much technology over the last 10, 15, 20 years or more for global businesses and other software product companies. So that talent is sort of in place. Defining products is something which is a new type of talent, which also got created over the last 5, 10 years or more. So that is again a good ingredient. Third is marketing and sales talent needed to distribute these products across the world. And obviously, as being SaaS, you can sell anywhere on phone. So that distribution ability is also getting built. So because in IT services, usually you had few salespeople and many delivery people. It's very, very skewed on delivery side. But in SaaS, it is more marketing, sales, and product talent. And I think that is coming in place. And finally, I'm not so familiar with the IT services investment landscape, not the business per se, but capital which is needed to scale this business is also now coming in place. So I think all the ingredients are in place, and if the entrepreneur figures out the product market fit, then all the other ingredients will be available for them to build a global business.
Got it. And since we're doing a then and now comparison, Akshat, this question is to you, and then I'll come to Imran about it. How has your investment thesis changed, if at all? You've been a part of Chris Capital, and it has backed some marquee companies, including Infosys and HCL. So has your outlook towards the kind of companies and the sectors you pick changed at all?
So, Payal, it's a great question. I think that has been a very fundamental feature of our investing over the last 20 odd years that Chris Capital has been investing, and certainly over the last 10 odd years I've been associated with the fund. Technology landscape changes very quickly. There are new technologies coming in every 5-10 years, and that definitely requires us to keep tweaking our investment thesis. The formula that worked 10 years back is certainly not going to work now. And therefore, we have found ourselves reinventing our investment thesis every few years. And the challenge as an investor is to not just tweak the thesis, but to make sure that we're ahead of the curve and we're placing bets in areas that will become new emerging growth areas in the years to come. Because if you get that cycle wrong, then there's a lot of damage that can happen to the investments. So that is a very integral part of investing in technology services. Being ahead of the times, keeping an eyes and ears close to the ground, and seeing what trends are emerging.
So, which are some of these areas which you see currently that that will define the future of the growth of the sector?
There are lots of areas, I'd say. If I look at sort of top down, clearly this whole area of digital transformation is where all the attention and all the dollars are being put in currently. A lot of corporate attention is being put in these areas. Now, this is a little bit of a macro trend. You have to, as an investor, peel the onion and go 3, 4, 5 layers underneath to see what specifically are the areas that are even faster growing. Are there certain verticals where these trends are a lot more mature than others? Clearly, digital transformation is one. And that encompasses all the new technologies around cloud transformation, design elements, user experience, platform engineering. All of this I would club under the ambit of digital transformation. As you talked about, SaaS is clearly definitely an emerging area as well, and that ends up leveraging some of these technologies, and that's also somewhere within the ambit of the broader digital transformation bucket. The third area that is worth pointing out is sort of the whole engineering bucket, which goes as much on the software side as it does on the hardware side. Increasingly, as is a famous saying, the world is becoming a software, right? Cars are becoming softwares. The software is pervading into all industries. So really being able to marry the needs of traditional industries like oil and gas to what's happening on the software side, that's also a very interesting and emerging trend that we're watching out for.
Got it. And Imran, would you like to weigh in on your investment thesis, and also, given that you've backed a company like, say, Lead Square, so are you primarily focused on SaaS companies to see the next cycle of growth in the IT and services sector?
Thanks, Payal. Yes, we're very excited about our investment in Nilation team at Lead Square. We think it's a very exciting company. When you look at our investment thesis, actually, it hasn't changed at all. We're growth stage private equity investors. So we're looking for risk at the growth stage, which means companies and sectors that have validated unit economics, have scalable models, have demonstrated margin improvement and operating leverage. So in many ways, Indian SaaS is an overnight success on the back of 30 years of work that IT services has done. There's 30 years of work, 3 million developers, $190 billion of revenue, and a lot of value created by firms like Chris Capital and others in the traditional IT services companies. My first job was in Wipro Technologies. So I think India's SaaS is really, in a way, standing on the shoulders of this giant. But I feel the real opportunity for all of us is, can SaaS generate $190 billion in revenue in half the time and not take 30 years. And I think very strongly that that's possible. One, SaaS is more scalable. Second, it democratizes software. So unlike the traditional on-premise software world, which only large companies could afford, you now see smaller companies and larger TAMs being addressed through SaaS. And we have the talent to build it. So our investment thesis, in short, remains exactly the same. There are 50 companies roughly in India in SaaS with ARRs of more than $10 million. We think this will be 500 in a decade. So this is a very rich nursery of interesting investment opportunities for investors like us.
And when we compare this rate of growth to, say, traditional or the previous generation of IT services and business services companies, have they been able to match up, or have they been able to keep pace? And this is open to anybody who would like to weigh in on this. Can we start with Akshat? Yeah.
Sure. So I think it's a bit of a tough comparison looking at the IT services industry and SaaS. Both are in very different stages of their life cycle, and clearly that is being witnessed in the kind of growth rate you'll see in SaaS companies. As Imran pointed out, SaaS companies fundamentally are more scalable in a non-linear way. IT services still is relatively more headcount driven, and that will bring a certain linearity in the growth. On the flip side, given the maturity of the IT industry, the risk associated with the industry is a lot lower now, given it's sort of demonstrated its success compared to the SaaS industry. So very different animals, very different risk rewards, very different success factors. So each has its own promise. Each requires you to find the right assets, and there are enough risks of going after the wrong assets in both industries as well.
And Imran, would you like to weigh in on that?
The real challenge in IT services has been productivity. So, in the last 2 decades, if you look at typical IT services firms, the revenue per employee hasn't moved beyond the $50,000 mark. And most of the growth has come from the rupee dollar, depreciation, and the median age going lower and lower in these companies to be able to squeeze out profits. In SaaS, this is completely different. SaaS companies are built for productivity and scalability. So you're able to see, higher growth with superior unit economics for the most part. So I think that contrast is interesting. I think this doesn't mean, of course, that IT services cannot create value. There will be companies that will transform. We believe some IT services companies will also acquire their way into this capability, which is a very interesting M&A opportunity that opens up for a very large sector like IT services.
Which was going to be my follow-up question to Shrikar and Virender, that, how are you keeping pace with this rate of growth? And also, is M&A a good way of growing or a good way of, reaching that scale, which has become slightly difficult for that?
Sorry, Shrikar, you go ahead.
Okay, yeah, thank you. So I think let's take the second question first. I think we've looked at M&A as a very relevant way to grow. We bought about 6 or 7 companies in the last 6-7 years, and we continue to look at it. It's obviously to get new talent, access to new markets, new capabilities. We also went and bought a lot of IP because right now we use IP as a differentiator in our services business, but there is a potential to actually bundle it and see whether we can be run as a purely IP business. But we went and bought actually product companies. We recently went and bought a customer experience platform company. So we do see right now we are using IP as a differentiator in our services business, and that's helping us differentiate ourselves. If you see our margins and so on and so forth, they're way above our peers kind of stuff. Obviously, to manage growth, I guess you need to, it's all about talent, I think, is what I see currently. I think how do you get and scale the right talent? Talent shortage, I think, will get more and more severe as we go forward of the right kind. So getting the right talent and then ensuring that you give the right environment for them to build businesses, I think I would say is the biggest challenge I see for growth. I think most people have got their strategies reasonably correct, I think. So I don't think that's a rocket science.
See, we are not a services company, so we are a product company. So for us, the equation is different. So for us, the main thing is to take it global. 80% of the revenue comes outside India, and increasingly outside India is growing a lot more faster for us. And we are B2B software business, and mostly with very large companies. You can say Fortune 500 or Fortune 100, you can say. Most of the clientele is in that area. Our average ticket size is fairly large. It is minimum, average ticket size $1.2 million for us. TCV, I'm not talking about annual run rate. So we are going after large deal, large businesses, large corporates, and so on and so forth. Acquisition is something we are not considering because we find technology incompatibility a major challenge, and we rather build it quickly rather than try and integrate somebody else's technology. If at all acquisition takes place, it will be for acquiring a certain customer base or certain areas in which we don't have a solution to the whole equation. And I think I'll share the view that the SaaS companies will grow a lot more faster. In valuation, they will grow maybe 10 times faster than services company grew. And in revenue also, they'll grow maybe 2 to 3 times faster than whole. I think one of the companies here will just break the barrier and start growing like Amazon did. So we will have explosive growth in 1, 2, 3 companies on a global basis, and we should see if we have 1 trillion plus market cap companies right now, about 3-4 of them. We should definitely see a 1 trillion plus company out of India in the next 5 to 8 years time. In SaaS business, not only in services, I think.
Right.
I don't know whether we'll ever see a day of 1 trillion or not, but SaaS definitely will see a day.
Okay. And when it comes to product innovation, Virender, is it all done in-house for a company like you? And are you able to keep pace with most of the new generation, say, pay-as-you-go model, which SaaS provides?
So we are not in the pay as you go and freemium business because we are in a B2B business. But however, product innovation comes from, seeing what is going on globally. Like we are betting the farm on zero UI. Most of the transactions will be done on bots or on chat, or on voice. So I will bet the farm on voice AI massively going forward. That's what I will think will happen. And somebody mentioned software is eating the word, and I will say AI is eating the software word. So the low code, no code movement is going to eat. If you see GPT-3 that is coming, it's going to eat the software word. So we are living in a world in which we need to very, very rapidly change because the game is changing at a mind-bending speed right now. And with quantum computing and quantum computing beginning to become mainstream, the software will write itself much faster than any programmer can write it. And that is happening. I mean, we can't be in denial. I mean, we are beginning to use ourselves some low code, no code, and I can say 90% of the code is cut now. We no longer do it. So I think innovation is not doing the focus group with customers and figuring out what they want. Customers may not really know what they want. So we have to lead them and tell them what they may possibly need or want because customer can only imagine based on what they have seen. So we are playing on the edge. When we say we means anybody who keeps abreast of what is going on globally. We are playing on the edge. It's our job to convert emerging technologies into what is the possible based on what can happen. So for example, I have told my team 90% of the data entry should not take place in the ER. It should be imputed by AI ML engine itself. So that's what where the world is heading for, and that's what we have to get a leg up on competition because even Salesforce will become legacy to Nilesh, for example. So he has a chance to leapfrog them because when you are in business for that long and when you become big, you can't innovate. The only way you innovate is you keep buying more and more companies. When you keep buying more and more companies, then you become a spaghetti like Oracle became at one point of time.
I just have one point to add. Doing 1 + 1 in quantum computing is very hard. Writing that program.
Right.
So the old programmers would have a tough time migrating to the new quantum world.
And as to what Virender said, Nilesh, what do you think of the ability of SaaS to innovate and probably give products to customers which they might want or which they haven't heard of? Like I think that is one job which new age companies do well is to bring out new products which customers wouldn't have imagined or would have thought that they need even to begin with.
I think the same company is doing it every time and getting it right is very, very hard. Like one company, doing it in multiple areas is extremely hard. But the fact is, if you look at Valley and what is happening in India, entrepreneurs are creating lots of new technology, right? I mean, I think unfortunately not everybody is able to scale it, but ability to create those new product offerings at relatively lower cost equation is you can see it incrementally. Like there are tons of SaaS companies. I mean, what Imran said that there are 50 plus or more in $10 million plus. I think 3 years ago you could have that number in $1 million, right? Like so, I think in 3-4 years it has become from $1 million to $10 million. So I think both are getting demonstrated, right? You are able to see innovation coming in. That's why people are paying for it, and scale is also happening. Whether that will happen inside the company or not is obviously a questionable thing because getting new stuff done in the company, new product lines getting created is and still getting very differentiated is hard, and that's why I think people go and buy companies to sort of augment that stuff. But yeah, I think it's going to be I mean, it's hard to do from what my experience is. So if you can do one a good idea in a year or two, I believe that is definitely a good thing.
And taking from that, Nilesh, I'll open up the question to the investors on the panel, which is that, how important is it to come up with a new product every time? Like, say a company is looking at growth capital or, funding. Do you think that focus on the specific area is what drives your interest? Like, would you like to see a company which has a long-term focus in a specific area, or would you like to see a company which is growing at a certain rate, coming up with new products every time?
Shall I take that, Akshat?
Great. Yeah.
Our bias is clearly to execution because we are growth stage private equity. We're not venture capitalists that focus on innovation as much. So we're really looking for teams that are customer obsessed, that have found some white space in the market and are out executing their competition. So really for us, the bias is execution, it's focus. It's as much about the commercialization and monetization of what you've built as it is about the innovation around what you've built.
I would agree with Imran, and what I would add is I think there isn't one size fits all. I think it's important to be clear what the thesis is going in. There are certain products or even certain services which may have very large addressable markets, and there the focus has to be on execution because there is a lot of reward for successful execution by staying focused. There will be other areas where the addressable market may be smaller, and therefore one has to sow the seeds of the future drivers of growth today, while at the same time staying focused on execution of the current product. So there's no hiding away from execution on what you have today. The question is, at what stage in your life cycle do you start investing in other products? Is it going to be within your medium-term investment horizon, or is the addressable market large enough for you to have the luxury to push out that decision and double down on current execution?
Got it. And how aggressive should companies be when it comes to sales? And this is a question open to also given the current scenario when I think most of them are trying to catch up to the demand which transformation has brought about. So Shrikar, would you like to weigh in on that, and then we can move to the other panelists?
I think as aggressive as you can afford. I mean, I think there is no rocket science to this. If today I can
going about it.
100 sales guys and 200 pre-sales consultants in all markets, I will do it. So I guess at the end of the day, it's absolutely. I think if you turn around the question, I would say you should go and invest now in advance. I think I think your investment in sales right now should be a lot more than what you've done in the past, because I believe that the opportunity is humongous and opening up rapidly. So you invest now. I mean, whatever you, as I said, end of the day, it's about finally your affordability. But I think you should go and invest in a lot of sales, pre-sales, consulting, whatever else kind of stuff. So that, including with existing clients, it's not about getting new demand from new clients. I think there is a huge opportunity for at least IT services companies in mining existing clients, and that's the business model we have. Saying how do we get a client and how do we make them sticky, annuity, and so on and so forth. And there's a humongous opportunity there. So I would say throw as much money as you have into growth. I mean, across the board.
And are these mostly offline sales we're talking about? Are we also talking about a lot of sales closing online, given also the current scenario that travel is not happening, etc.?
I mean, right now, all sales are online, irrespective of where the person is. Even if you're a person in the US, he's still operating as an online person. But I think going forward, you need to invest in the markets in which you're operating in. Clients like proximity, clients like intimacy. Clients like you to invest in the markets in which they operate in. I mean, you can't say I'm a purely Indian company, I don't like to invest in your markets. So you have to go and invest in the markets in which you want to operate, sometimes in a purely time zone issue basis. I mean, you can't make your people work like late nights every day kind of stuff to meet customer demands and so on and so forth. So you have to invest in the markets in which you're operating.
And if I might add a follow-up question to that, what percentage would you think, or what kind of budgets have you set aside to capture the current demand?
I can only say we're going to double our investments. I'm a public company. I can't make.
The answers as well. We're going to decline. Yeah. Right. Virender, you were saying something.
No, I think I'm just echoing on to what Shrikar is saying, we have opened up legal entities in about 22, 23 countries, and we have office in every city globally that matters. And being in the same time zone, having support, giving support to the customer in the same language by same national people is going to be extremely important, especially for selling high-ticket items and not $5 per month kind of subscription or something. So I fully endorse him, but I am more bent upon spending the money on marketing, less on actual sales. So my feeling is a lot of discovery in the sale process takes place online. So the demo, the validation, etc., takes place online. So we have invested in fewer salespeople. We do a lot of spend on marketing, digital marketing. Almost every lead for us gets generated from the digital marketing channel that we have. We also have people who are influencers who work with us, who shape the opinion about us and the product in the market. So I would think for a product company, marketing should be the single biggest expense.
Okay. And has that gone up? Has your spend gone up in this over the last year and a half?
Spend actually has come down because we have learned to weed out channels which are not so effective. Earlier we were using a lot of Google AdWords, which is somewhat wasteful channel. So we have learned to much more finely target, and the tools given by the likes of LinkedIn and many other providers allow you to micro-target, micro-segment, and so on. So we do target a lot of very micro-segment, like in case of aviation, we will target only engine MROs, 300 customers. Earlier, we would target a 3 million aviation community and waste the advertising dollars there. So we have learned to fine-tune it massively. We don't reach when our housewife with our ad. We just reach most likely decision maker in that targeted segment with our ad. So that's the micro targeting that we have done, and that's working very well. So maybe we have reduced the budget to half, but doubled the output. So 4 times increase in productivity of our marketing spend.
Okay. That's quite interesting. And Nilesh, how are you going about your growth phase currently? Like, where is your advertising money or marketing money or growth expansion money going? Which channel?
No, I think we'll be definitely increasing. We already increased our budget now. I think for a SaaS company, up to 50% spend of revenue is very, very doable, depending on what the model is, obviously. Some companies which are more product-led have a lower spend, so our spends are going to go up and are already gone up. And I think the way I look at it, in our kind of firm, having salespeople, so getting interest, inquiry, and then following through with the salespeople and then closing is the process. So it means that the more inquiries you can generate and the high quality salespeople you can hire, will define the scale you can achieve. So if I can hire, 500 salespeople high quality today, I will do them. I will do that. And so, my only criteria is if we can get good sales talent, I'll get it. Like, we'll find the budget basically.
Got it. Yeah, that's a good way to look at it. Imran, would you like to weigh in on, how the companies can actually, how do you look at your growth stage companies capturing this entire global demand? And, what is your advice to most of your portfolio companies when it comes to spending on growth versus, internal product innovation?
Yeah, I'd say that, our investment thesis has a slight bias towards, and speaking of SaaS, towards companies that are born in India, built in India, find product market fit in India, and then go global. And we think this gives them a competitive advantage, a competitive moat, makes their business model more robust. You're able to see higher capital efficiency and so on. So if there are entrepreneurs in the audience who are debating, should I build a product in India and sell in the US first or sell in India first? Our view is sell in India first because the customers here, the terrain. So invest in your customers and in the market right here in your backyard first before you start scaling globally. That would be one advice. And second, on sales, and I've now learned this from Nilesh, in the last few months. I mean, you can't go wrong with investing in sales. Sales is a very high ROI, business unit within your organization. And if you're a growth company, you can't go wrong by hiring, training, and arming high quality salespeople with tools like Lead Squared so that they're more effective in what they do. So absolutely invest in sales. Is the lifeblood of your organization. And if you're a growth stage enterprise, growth is everything, right? That's the only metric you need to focus on.
Got it. And Akshat, one question for you would be, are you looking at companies beyond India which either sell to the India market? You've been traditionally focused on the Indian market, so to speak, right? So has that changed in any way?
While actually things already changed several years back. We might be an India-based private equity fund, but if you look at our investment portfolio last several years, it betrays a much more global bias than an India bias. In fact, most of our recent investments have been in companies that are sometimes domiciled in the US, often enough headquartered in the US. So we made that move quite a while back. Frankly, the IT services industry always had a certain flavor where the customers typically were based out of the US and Europe. At least that's what constituted the vast majority of the industry, and the supply was based out of India. I think that continues to be the case. It's just that there has been a growing benefit out of having more feet on the street in the US, be it on the sales side, sometimes managing bandwidth, being closer to the customers and closer to the emerging technologies. That's what we've at least witnessed has helped some of our portfolio companies emerge as winners. So we continue to believe in that mindset. And at least on the services side, there's a lot more merit in focusing on some of the more developed economies as a stronger test of your capabilities, which is just a little bit of a different approach than what Imran articulated on the SaaS side.
Got it. Noted. So since we are, I think, on time right now, unless any of you would like to weigh in on what Akshat or Imran said, anybody, Shrikar or Virender or Nilesh, would you like to add something?
No, I think we have had some very interesting discussion.
Thank you so much. Yeah, thanks. Thank you. Thanks everybody for joining this.
To say, if you get good salespeople, send it to me.
That's a plug, Nish.
Thank you.
Thank you so much for your time, everybody. Really appreciate it.
Thanks everyone. Thanks, Payal.
Excellent. Glad to participate. Thank you.
Thank you. Over to Kavya.
Thank you, Payal. Thank you indeed to all of our panelists. What a fantastic discussion that turned out to be. Some interesting insights that we've all gathered from all of our speakers. So thank you indeed to all of our panelists. And thank you, Payal, for beautifully moderating the session as well. I think we've had a wonderful head start to the entire summit with a very focused topic and also getting some inspiring thoughts from all of our panelists. Now let's keep that trend going on for the rest of the panel discussions as well. So here's what we're going to do. We're going to proceed towards our second panel because we've got some interesting questions and let's get those answers from our panelists. While that happens, I'm also going to request you all to keep those tweets coming using hashtag VCCTechSummit. And with that, let's now move forward to the panel 2, wherein we talk about which buckets of data management have had more success stories and how does the future opportunities look like for investors. This is, I'm sure, just one of the questions amongst the others that we will be asking our panelists when we're focusing on mining investment dollars out of data, security analytics, compliance, and more. So let me quickly bring on board our set of panelists who are joining us one after the other here. We have with us Shrikant Velamakanni, who's the co-founder, group chief executive, and executive vice chairman, Fractal. Fractal, as we all know, is a leading player in the artificial intelligence and transformative enterprise decision-making space. Fractal's mission is to power every human decision in the enterprise and to use the power of AI to help the world's most admired Fortune 100 companies. Since Shrikant co-founded Fractal in 2000, the company has raised more than $300 million from institutional private equity investors as well, and most importantly, create massive amount of impact. Let's also move forward to introduce our next panelist. We have with us Dr. Anil Kaul, who's the co-founder and CEO, Absolute Data, an Infogain company. He comes armed with more than 22 years of experience in advanced analytics, market research, and management consulting. Now, prior to Absolute Data, he's also worked at McKinsey & Company and Personify. He was recently listed among the 10 most influential analytics leaders in India by the Analytics magazine India, and has also been quoted as a game changer in the research world magazine from ESOMAR. With that, let me also move forward and invite our third panelist. We have with us Abhishek Srivastava, Director, India Partners. Now, with his passion for building the next wave of world-class product startups, operational advice, and strategic guidance, it comes naturally to him. And he, of course, is the Director, India Partners. I'm going to also quickly invite, we have with us our session moderator, Ranjini Raghavan, Associate Editor, VCCircle, and she's someone who writes about the private equity, venture capital firms, and Indian deals ecosystem. Looks like, I believe there's a little echo because everybody's mic is on, but no worries. I'm going to hand over the proceedings very quickly to Ranjini. Over to you.
Thank you, Kavya, for that wonderful welcome. A warm welcome to all of you once again. This panel will talk about the kind of opportunities available to new age data companies, especially those in artificial intelligence, analytics, security, and storage, and also how small and mid-scale tech companies can create attractive business models around data. We'll also talk about the challenges involved in scaling such businesses and the kind of investor interest that these firms have already seen. As Kavya mentioned, we have Srikanth Velamakani, the co-founder of Fractal Analytics. Fractal is backed by Apex Partners, and they've also seeded multiple businesses, which has separately attracted a fair bit of investor interest. Dr. Anil Kaul, co-founder of Absolute Data, which was acquired by Infogain last quarter. Infogain is backed by Chris Capital, as many of you know. And our third panelist, of course, is Abhishek Srivastava, Director at India Partners, which has already backed a fair bit of many companies in the digital and the tech space. So thank you all for joining us. Let me begin with you, Srikanth. Can you give us an overview of the kind of opportunities that data firms are seeing now? And how do you look at the segment from your point of view?
Thank you, Ranjini. Glad to be here. And hello, Anil and Abhishek. Great to see you guys. The space of AI, as you know, in the previous panel they were discussing how software is eating the world and how AI is eating software. So the world is, in the last 1 year, if not before, the last 1 year has showed that companies have really stepped up investment in digital in general. And the way we think about our business is to power every human decision. So companies are making millions and millions of decisions every day. Can they make it through analytics, AI? Can they drive it? And given what's happening in terms of people leveraging the cloud, people doing what is called digital transformation, it's very confusing when you hear about so many technology buzzwords associated with digital transformation, AI, blockchain, IoT, and so on. But essentially, if you synthesize everything, it is about a smarter way of building a business. Can you leverage everything out there? Can you make your business data-driven? And it is about making better executive decisions. It's about better consumer connect. It's about better removing inefficiencies. It's about building better products. It's about building moats around your business, managing risks, building sustainability. These are all the questions that people are trying to do as they build the business. And data is driving all of that. So I think of the data or AI business as a very significant fraction of the overall technology industry in general. Maybe a third of the technology industry is how I would think of the AI and the opportunity that Fractal targets and the people in this call are targeting. Right.
Anil, can you add to that? How are you looking at opportunities and your experience so far?
I think, certainly very much in agreement with what Srikanth talked about. We're seeing a huge amount of change. And I think more than change, the acceleration that is taking place across almost every customer segment that we work with. People are, moving very fast in terms of getting access to the data, using that data, and trying to build technology that's able to bring the intelligence from the data into the decision making that they're doing. So there is actually a sea change from in the last 1 year, thanks probably to COVID and other things that have happened along with that, that this change is going in a very big fashion. And I think there's one other piece that I would mention, which is there's also a very big focus now on building what I would call our data-centric architecture for a company. So, when you think of cloud, when you think of AI, all of those things are where the companies are now starting to look at how do we rebuild the company's data architecture so that data is centered to everything that is going on. So there is tremendous focus on moving data to the cloud, moving analytics to the cloud, moving all the different tools that are using data onto the cloud. So there is actually, this is one of the best times to be in this space right now.
Right. Abhishek, can you bring in the investor angle and talk about what are the segments that investors have found most profitable?
Yeah. So, Ranjini, first of all, I'm assuming I'm audible, right? Just let me know because I'm using the leanest, the leanest infrastructure right now. So, no, thanks. Thank you. And great to be here. I think if I could just elaborate and bring in the context to the question that you have asked, Ranjini, the way we see it, right? Data largely exists in three forms today. Either as a company you're generating data, or you're processing a huge amount of data, or essentially, you kind of leveraging data in terms of acquisition, which is data acquiring. So each of these become the moat in themselves from our perspective. Like I was saying the other day, I think how AI ML has now become a very, very common feature and commoditized phrase or slogan in any pitch decks that we come across. Data has been there for a while now, right? So I think essentially how and where the decision gets done as an investor is not so much just alone on the data. It's about how effectively are you leveraging that data to build a moat around your business model. What's the value proposition? And the other side of the coin is that amongst the data value chain, is it a new acquisition channel or engine that you're opening up? Or, is it kind of announcing data that another way of processing data that you kind of have
you kind of lost you there, Abhishek.
Probably found during your regular course of business. So I think eventually for us it boils down to a business model. But yes, data remains the crux of it because if the data flows naturally in the business model, that becomes an interesting aspect for it. Very quickly to your other question, profitability wise, I think the jury is still out. Of course, I mean, Google has probably spoken the loudest with respect to the profitability. They built an ad exchange, it's all built on the data, Google search engine. I think analytics and Srikanth and Dr. Anil or strong words, they would know much better that our solutions company have still been very profitable. But some of the other data exchanges in the Indian context, even US, it takes a lot of time to achieve profitability. But when they do, it becomes a simple API engine. The problem is that in India, the appetite for an investor to play a long game without the revenue is very small versus outside. So I think from a profitability standpoint, still today, data together with the product is how we see, as kind of giving a moat rather than data exchange by itself. But hopefully, a time will come where a new data or accessibility to a new kind of data by itself could be a very interesting business.
Right. Srikanth, if I can bring the profitability question to you, I'm not sure we actually understood Abhishek fully, but he spoke about certain segments that are profitable and whereas some new other segments that, I mean, if you can explain from your point of view what you have seen in the market.
Thank you, Ranjini. So first of all, I apologize. I did not hear what Abhishek was saying. It was very hard to make out, but I'll try to try to tell you at least from my vantage point. Firstly, as Fractal, we have been profitable from year 3 of our operation. So it's easy to build a profitable business in the AI and analytics space, as evidenced by Absolute Data has been profitable throughout. So has a bunch of others. In fact, some of the other companies have phenomenal margins. So profitability is not an issue. Secondly, specifically, if you take SaaS businesses, they do have a characteristic that there will be a significant sales cost, and because of the more sticky but continuous nature of revenues and per month per user, the cost is low. They take time to become profitable. I think we have to look at the right metrics so that there is a good investment justification to build those. But it's not that the companies are inherently unprofitable. It's just that the way they set themselves up, there will be initial years of unprofitability. But what we have to look at is, are they a really high gross margin? And the sum of the costs that we are looking at, for example, sales costs, which could be, could be between 50 to 100% of revenue. In case of a SaaS company, sales cost could be 50 to 100% of revenue. These are costs that are going to be there as part of growing. Can you really dramatically accelerate growth? If you're growing at 100%, we should not care about profitability.
Right.
Abhishek, I think you may need to be on mute because there's some buzzing sound coming from your end. I apologize. So if you're growing at 100%, you don't have to have EBITDA margins at that time. So what we look at is, what is your growth rate and what is your profitability rate as seen by EBITDA margin? If you add the two up, you are at 50 plus, you're good. If you're 50% growth and you're zero profitability, you're good. But if you're 100% growth, you can be unprofitable. That's also okay. So that's the way to, at least I look at it, because we do have a portfolio of investments we have created in the AI space. For example, Cure.ai, which is growing phenomenally, getting a lot of investment interest and growing in the right way. Similarly, we have a data-driven investing business called Theramint.ai and Cuddle.ai. Each of these businesses are growing, and we keep looking at this one metric. Are they growing fast enough? And are they at the level of profitability or lack thereof? But if you sum the two, is it more than 50? That's really my own sort of mental benchmark to think of whether these companies are doing well or not.
Right. And to both of you, what are the challenges that you faced in terms of scaling these businesses when you're just starting up, when you're building data businesses? How do you look at monetizing it? What are the streams that you're looking at? Anil, if you can take that, and then we'll come to Shrikant and then Abhishek.
Sure. Yeah. So I think, of course, when it comes to scaling up, it does, of course, depend a little bit on, the two types of businesses that Shrikant mentioned. So the SaaS business, there is a slightly different focus on scaling that up versus if it's a services business. Right. On the SaaS business, I think the challenge usually tends to be more on product market fit. Right. So because this is a space that's been hot for a long time. Right. I think we've been hearing about big data and analytics for almost 15 years now. However, there are different parts of the data stream, if you might think of it. The data stack that you have, which have been growing at different rates. So I think scaling up, the product market fit becomes one of the most important pieces to it. Second, of course, is then putting your organization which can scale as the demand goes up. Right. So if it's a services business, can you build accelerators? Can you build technology that can replace people? Because that's what's going to give you an exponential growth rather than a linear growth that you will have if it's just a people-based business. And finally, of course, is something which was discussed in the previous panel as well, having the right sales team and the right marketing presence in being close to the client and being there. I think those are the kind of factors that you need to keep in mind while you're trying to scale up the business.
Right. Shrikant, to you, how would you look at that?
So your question, Ranjani, was how can we, how do we sort of build it about the initial stages? I think in the initial stages, in a services setup, it's about getting the right clients and building the right team. Because if you have the right clients and you're solving the right problem, you're differentiated, you have a great team, I think you can build profitability very quickly. In case of the SaaS businesses, like Anil has mentioned, it is initially about getting the right product market fit. And there will be several pivots to do that. And then it's about just getting sales acceleration. I think building a brilliant sales team, having the entrepreneur, the founder initially the founder is a tech person, right? She or he is a techie person because has the product vision, building that out. That's the initial role. can they really reinvent themselves to be a salesperson, right? The best founders are the ones who have been able to make that transition from a techie to a salesperson at the right time of the business. So initially it's all about product, get the product right, get the tech right, get the product market right. But after that, it's about, can I really drive sales? Or if they're not, can they bring on such people to come and lead sales that they can accelerate? That's really what I've seen as the initial sort of things to do to succeed as a SaaS business, especially in the AI and tech space.
Right. That's interesting. I was also wanting to know your thoughts about, with so many data companies coming now, data is, if everyone has access to the same data, the increasing commoditization of data, how do new age business companies that are breaking into this segment, how can they differentiate themselves? We can accept, the team would be a differentiator. In addition to that, are there other trends that you've noticed that has helped companies differentiate themselves?
I'll take a shot at it, Ranjini. I think today, any entrepreneur who's starting a new business in the AI space has to pick a very specific problem and really be extraordinarily good at solving that problem. Rather than trying to take broad set of things and build a generic firm, I think it's going to be very hard to scale that kind of a business and build expertise, etc. So pick it should be a big problem. The addressable market should be big, but it should be very focused problem. Because really where AI is doing extremely well is actually in specific problems. The age of general intelligence, super intelligence, and all that is at least 10 years out, maybe 20 years out. But right now, AI is very good at solving narrow problems. Take a narrow problem, build it end to end, and really validate with customers and clients, right? And that's what I think we'll have to do. So if Cure.ai picked healthcare, I'll tell you the evolution of Cure.ai maybe in a minute or so that you can see how that happened. So Cure.ai started when Prashant Warrior was the CEO of Cure.ai and I brainstormed initially. We said, let's do something in healthcare AI because healthcare AI is such a place where we can make a meaningful change to the world. So that was how generic it was. After healthcare AI, after some brainstorming, we said, let's do genomics because that's a very interesting area of AI. And let's do potentially imaging. That was the two areas we thought we could bring AI because that's where we felt like we could solve good problems. After a few months, we narrowed it down and said, it's only imaging. Let's do just imaging because that itself is a very big space. After that, we said within imaging, we had 17 different solutions at one point of time. Then we narrowed it down to saying, let's pick two. One is chest X-ray and head CT scan. And chest X-ray, by the way, tuberculosis is. And we really hit a really good spot when we said, okay, tuberculosis is a very important problem for the world. India wants TB Mukt Bharat by 2025. And it is a huge, huge problem. If you can just use X-ray as a solution to end-to-end solve the TB problem, that itself is a huge company in itself. So we kept narrowing down because we felt the more specific we got, the more success we achieved in that business. I would say that this is as a general playbook for entrepreneurs is to take specific problems and go even more specific as you get success because you can scale and make a really big company by picking a very narrow problem and solving it end to end.
Right.
So Ranjini, I actually wanted to add another perspective to what Srikanth talked about. I think there is also a fairly large opportunity, when you look at data in the enterprise space. Because what you look when you go to, Fortune 1000 companies, they, despite the amount of investment that's been done in technology and the number of companies that exist there, the whole process of collecting the data, making it accessible, building solutions on top of that is still very slow and very inefficient. So there are a lot of opportunities available in automating and creating tools that are able to take and make that process easy. It still takes months and months before companies can get all of their data together before something can be done. I think there is quite a bit of an opportunity there. So if as a startup, as Abhishek had mentioned, there is an opportunity where you can own data, which is probably the tougher one right now. But there's a lot of opportunity as you go upscale. And I think Srikanth was talking at the one other end of it where, you're building solutions. But I think there is also an opportunity for that in the stack underneath that where you can create a lot of a lot of
Yeah.
Yeah, go ahead, Ranjini. I just had one quick point on this one to add. I mean, very, very quickly, again, the way we see it is very simply, probably a little too simplistic, but twofold, right? One is data driven and the other is data as a monetization. I mean, if a company is leveraging, data to bring in incremental advantage to their existing product solution is one part of it. And that's where your question of how do you build a moat really depends on the business model at the end of the day. Like Srikanth and Dr. Anil said, it's about putting those very, very high performing sales team, product in place, etc. I think when data is a monetization, then definitely you may have an edge depending on the value prop of what data you want to bring and how do you want to build your journey till the time you really start monetizing your data. I think that's the fundamental chasm in the Indian context, right? But just wanted to kind of quickly chime on that. Please go ahead.
Yeah. I was going to ask you if investors are able to accurately value these companies, or if companies are finding investor appetite to be greater abroad. If Indian companies, if there is investor depth in India to value these companies, or if they should go abroad.
Yeah, I thought that we are under a problem where a lot of things are getting overvalued. Nonetheless. So no, I think you have a very valid point. And again, fundamentally, if you go on the psychology of it, it's all about upstream capital and home, right? I mean, US, Bali. They've had companies like Apple's and IBM's and the Microsofts of the world who value IP product data a lot. Because they know how to leverage it, right? And they've seen those kind of multifold, I would say, share value jump or the stock value jump on their own exchanges. I think in the Indian context, it has been relatively, mute from a risk-taking ability, Ranjini. And that's where even today, in a lot of these very deep tech or data-driven or IP-driven businesses, the upstream investors still want to see a certain amount of revenue generation, a certain amount of stability or repeatability, which I think is gradually waning off. And for the good, I believe, because I'm not saying that all 10 out of 10 investments will pan out. Definitely, 8 or 7 of them will fail, but the remaining 2 and 3 will make history, right? And I think that's what at least we strongly feel that in the Indian context, that's why most of these startups. Case in point for us, one of the companies had to reach out and raise money from US investors, and then you had a lot of follow-on investors from India. When you have the lead investor from US. So I think there's a bit of a playbook generation going on, and as far as IP and data play is concerned, before monetization and revenue generation. But we definitely see at least the early stage chasm now a little bit filling up. Hopefully, the more upstreams, the growth stage as well, will fall in line. It's about seeing few successes.
Right. I want to also, get Srikanth and Anil's view on this. Srikanth, if you can go first.
Yeah, I think currently, firstly, I think the valuations across the globe right now are in a range where at least I am not able to make sense of it. I will make that statement right here. I have no idea why companies in our space, for example, are trading at 50 times revenue. Palantir trading at 40 to 50 times revenue, C3.ai trading at 40 to 50 times revenue. So I have don't ask me to explain it any rational way why this is true. I don't know. Having said that, I think within India also, India is capable of crazy valuations. I mean, as Baiju and others have shown, there is no dearth of excessively overvalued companies in India. But it's still, in general, it's harder for Indian entrepreneurs to raise money in India, especially in the very early stages. The more crazy you are, the less chances that you'll be able to raise money in India, but higher you can probably raise it in another country. So it is still very hard for, I think, entrepreneurs starting out, especially if they're going to need a lot of capital, if they have very big vision. If it's more tried and tested, it's easier. If there's a great US example that we can sort of copy here, that is easy. But if somebody has an original idea, I think it's not that easy in India, even today. But once, what I'm seeing is that market is sort of moving to a place where they're saying, okay, this is a winner in this category. For example, every market has concluded that Baiju is a winner in the EdTech category for what it's worth. Now, after that, there is no reasonableness left. Everybody is pouring tons and tons of money. But till such time, it's still hard for Indian entrepreneurs to raise capital. So if you can raise capital outside the country, I think it's a good idea. It's because, like I think Abhishek has rightly pointed out, if they see that a Kleiner Perkins is investing in your company, and it doesn't matter good or bad, everybody else will want to follow because it's such a great iconic name to follow. So that's always a good idea. So that if you're an Indian entrepreneur, it's a tricky situation. Either you are getting a lot of requests for people wanting to put in money, or you are still struggling to raise any money. So there's a very wide chasm between the two ends.
Right. Anil, do you agree or differ, or you have a different view? We can't hear you. Can you unmute yourself?
Yeah, sorry. So I was saying, in general, I agree with what Srikanth was saying. But we just went through this experience, and interesting for us, we got acquired by a company from US, but which is backed by a fund in India. Right? So Chris Capital. So that was an interesting experience, and we did see actually a lot of interest from funds in India wanting to invest in this space. And I think part of it is probably is that, yes, our space is a little bit more mature. Company, there has been success in this space, so people can see that there is less risk. But there was actually, I would say, more than expected interest from various funds in India, as well, of course, in the US in this space. So that was quite a pleasant surprise for us. So I think there is an opportunity for the right set of companies.
Maybe if I can add one more thing, Ranjini, I also see a major difference between the B2B versus B2C categories as well. I think there is a little bit more exuberance and excitement in B2C. B2C AI entrepreneurs or any deep tech entrepreneurs are having it a little easier than the B2B ones. So there are many of. I am personally involved with a number of startups as part of the NASSCOM Deep Tech Club, and I sort of meet with a lot of entrepreneurs. And I do see a lot of struggles for raising initial capital because still India is a small market. Where if you have to start businesses, they're going to freeze, they're going to extract every pound of flesh. They're going to they'll do an infinite number of POCs, and so some of the companies are approaching with a lot of trepidation. How can I build a B2B business, especially India centric? So my sort of recommendation to the deep tech entrepreneurs B2B is that make your market elsewhere, get your investors elsewhere. India is not the place to build B2B deep tech startups, at least as of right now. And your big success might come. The same success is much easier. It's going to be much easier to get it in the US or other markets than India.
Very interesting. I would have thought B2B is easier because you're selling it to an enterprise, right? There is a lower appetite for to get customers to pay for your data, but or a service. But I thought it was easier to get enterprises to pay. I'm guessing I'm wrong then.
I can answer the tough enterprise market. I can completely attest.
Enterprise market is tough. I think, like Anil has rightly pointed out. B2C, it's clear that in India you can acquire a customer by paying 100 rupees. You give 25 rupee discount and you get customers line up to get it, right? So customer acquisition is cheaper. That's why you see the success of PTMs and Cred and all the other big brands is because the customer acquisition cost is cheap. In the enterprise market, customer acquisition cost it rivals the global markets, number one. Number two, the price per unit or whatever you're selling is still it's much, much smaller, a very small fraction of what you'll get in a different market. So I would think that B2B is much harder than India.
Very interesting.
If I may just briefly add, Ranjini, I mean, we are a more B2B focused fund. And honestly, in 5.5 years back when we had started, a lot of people smiled, laughed, smirked, what are you guys going to do building SaaS businesses, in a world and territory that understands B2C. And I think Srikanth, to a large extent, makes a very valid point. I think fast forwarding 3 years, 4 years down the line, I don't think there's any doubt right now as far as India is concerned that SaaS has come up as one of the very hyped sectors. I mean, it's like
it's the topmost juncture where as a business model SaaS has now SaaS is currently now in India, right? So I think to some extent the whole opening up of SME, a little bit of digitization push, some enterprises having their business, overseas enterprises having their business presence in India, also challenging Indian enterprises to embrace some of these digital technologies has worked out fairly well. And the case in point for us was Darwinbox. And when they started, we had a very, very rough number in our mind that what they would be able to achieve in India, right? But I think they have just beaten all those numbers left, right, and center. And also to your earlier question, how do you typically value? So they were a SaaS company and they were valued as a SaaS company. But interestingly, they have now built a data of more than 1 billion, 1.5 million employees sitting on their stack. And they have started running marketplace experiments, with those employees, right? So now it takes a different trajectory altogether. So I think even the valuation depends eventually, how your wrapper of business model is built around it. And that's where, each of these nuggets starts fitting in. But net, B2B is coming. B2B deep tech is definitely, with global markets being the key markets and the core markets, your investors are there, your customers are there. The sooner you step out, the better it is. I think, again, few certain early stage funds have come up. But, we have done very deep tech semis and few other AI MLs. In fact, Shrikant talked about Cure, we are one of the investors in Cyclical, fairly similar journey. I think the impression and the acceptance and the recognition of such plays in US and Europe is by far significantly more than India. And I don't think entrepreneurs should waste time if they have the access to those geographies early on. Experimenting too much in India is what my belief is. But maybe SaaS and typical software enterprise, there is reasonable amount of volume that can be built with such critical mass from India, get your product stable, raise more money, then you better step out in US and Europe where you'll have to fight out with the elephants.
Right.
So maybe if I can add to what Abhishek is saying. First of all, I'm very impressed with the India partners portfolio. It's very, very impressive set of companies. Obviously, they've done a great job of investing in some amazing companies. And I think, even the ones who have succeeded, and maybe Abhishek and Anil can validate if I'm making any sense here, the ones who have succeeded in the B2B enterprise tech, deep tech space are the ones who have taken a very B2C approach to it. One of the things that you can talk about market being not wrong or Indian, you can always blame your clients for everything, right? That's usually not the case. There's some market feature that you need to learn. One of the market features you need to learn in India is that it has to be incredibly cheap. See, Netflix can survive with $10 a month. They built a $10 a month business model and built many $100 billion organization, industry, right? But in India, many of those people don't take that approach. Hotstar did it with a very low price point for this is specifically suited for India. Most of these B2B deep tech entrepreneurs are still trying to charge a services type of a fee, like multiple thousands of dollars per month, and that doesn't work. What you need is to take a very B2C approach to it. $10 a month per user, build it out. It will be a small check, but if you can get adoption, you can build it. So it's partly learning for the entrepreneurs also to take. US actually succeeded; they could reduce the price per unit. India still the price per unit is very high, and that is a sure sign of failure because Indian client is as price conscious or more price conscious than the US one.
Right. Very interesting. Extremely interesting thoughts. If I can move to responsible usage of data, as we are, getting more customer data, as we acquire more customer data, how are companies, Shrikant, I know you have a lot of views on responsible usage of AI and responsible usage of the data framework in general. And I also want your thoughts on the data privacy law that's coming and how that's going to change companies. What if it's going to be challenging for you all and if you all need to tweak some of your frameworks? If I can start with Shrikant and then I'll come to Anil and then Abhishek.
Sure. I'm sure Anil has a lot of interesting thoughts here as well. We've been building similar businesses. So first thing I'll say is that I always want to apply a newspaper test to everything that he does, which means that exactly what we're doing today, if it was published in the newspaper tomorrow, I should be very comfortable with it. Right? So one of those such things is, for example, I was a little perturbed when Abhishek mentioned that Darwinbox is sitting on 1 million employees' data and they're now trying to run some experiments. That data belongs to the customers. It doesn't belong to Darwinbox. The moment any company does things like just because the data is flowing through me, I own it or I can use it, it's very dangerous territory. It's extremely dangerous. It destroys customer trust. So that's just one example. We are not, unless we sort of put the lens of, if I am the customer and if I heard this, how would I feel? I think we will not understand it if you don't apply the newspaper test. And in general, because of the power of data and because you can learn from each other, you can really fine tune an algorithm once we have a few clients, right? How responsible you are is, first of all, is it open? Is it transparent? Is it fair? Is it biased? A lot of these questions around accuracy, bias, fairness, etc. come in. But also, I also say that an overarching newspaper test is very important. That you can put, if it's an open box and everybody can see it, they are not going to be comfortable with it. Which I think is another thing that all enterprise tech companies or deep tech companies in India should be very careful to not to walk that path with that clarity in mind.
Right. Anil?
Yeah, I think, data, I wanted to address the issue mostly on data privacy, because data privacy has been an issue that's been simmering under the surface for a while, and now it's becoming very big. So, the whole issue that Google is facing with, removing cookies and all of that. And I think that's a mindset change that has started happening in a lot of organizations, because I can tell you this particularly from the marketing perspective. For a long time, the focus was that I will do better marketing if I have more data about my customer, right? So that is where privacy starts going out, because I need to know everything about you. Facebook is a good example. That I want to know what you do on Facebook, and I want to know what you do in the rest of the world. What we are seeing is that there is a big focus now on how do we overcome the privacy issue.
Right.
So there are solutions coming out. Google, for example, is putting one solution, and in fact, for many of our clients, we've put some solutions together where you don't need to, first target an individual customer. You don't need individual details on the basis of which you are making decisions, but you are translating individual customers into what we call archetypes, and then you're using those archetypes to make decisions. So you are now building this wall of privacy between the data that you use within the company and the data that, by the way, then you can also easily share across, and the individual whose data is coming in. So there are solutions coming from technology perspective and so on, which will solve these problems. But yes, these are areas where there is a lot of focus and a lot of thinking and innovation going on right now.
Right. Abhishek, is it a concern for investors when they look at investing in a company, whether these frameworks are in place?
Yeah. So let me first very quickly kind of, to Shrikant's point, so, once you have a marketplace, or once you have the access to the, let's say, potential set of users, you selling certain other products to him or to her, I think it's one part of it. Versus, you like Dr. Anil mentioned, I think you're going, building a social graph, right? Getting into the intricacies in the name, or quote unquote, in the kind of form of targeted marketing, much more segmented marketing, etc., is another. So I think from our perspective right now, it's more about opening the marketplace, what Darwin Box was heading to. So nothing to fear about, Shrikant. But I think coming to the larger question, Ranjani, I think so I have a slightly whether it's a topic of concern, 101% it's a topic of concern, and I think I am one of the users. I get very scared when I and my wife are talking about something and suddenly I see Google popping up into the same subject in some form or the other, right? So it's gone to that extent. So I think definitely as a user, myself and even otherwise for the others, it is a matter of concern. But the point is, where does one draw the line? Because people, the moment you say data-driven, you are pretty much on that path. Now, who decides and defines, till where are you going and till where are you allowed to go? And I think it's extremely important for certain very clear guidelines to emerge, which I know, this has been the focus and in the echo for a long while in the last couple of years. I think let's say in one of the companies that we invested in the fintech consumer lending space, Ranjani, I mean, this was one of the very, very critical points for us. Right, that what kind of data are you building? Because if you're saying you're building a proprietary decision framework, I mean, where to what extent are you going, and is it really inhibiting in one's own privacy territory, right? And whether one likes it or not, I think everyone talks about that proprietary mode. But at the end of the day, I think I somehow feel in India it's still fairly checked to some extent, compared to outside. But I think, yes, definitely, a line has to be drawn. But then where and who draws the line, be it responsible AI, responsible data, anything. I mean, responsible environment, we keep talking about it. But then how does one define the guidelines become very important? Because otherwise then it's actually left to the interpretation of one's wisdom, right? And hence creates a bit of a confusion here and there. Very interesting company we came across, building a social network, leveraging blockchain, where the consumers are allowed to monetize their own data if they want to. Very interesting concept. So definitely it kind of leeways into new business models and opportunities, keeping these aspects in mind. But I think irrespective, a cause of concern, but at the same time, some outside formal and institutionalized framework needs to emerge is my firm belief.
Right. Are there other models where consumers can monetize their own data? Is there scope for that in India? Anil or Shrikant?
Yeah, I have actually seen quite a few people try that. What I have not seen is a successful business model come out of it. I know of a number of entrepreneurs who tried it where the consumer gets to own the data and then try to monitor and create a marketplace of that data. But I haven't seen anyone become successful with that as yet.
Right.
So it's something we'll have to see if that happens. And part of it is because the consumers themselves are very happy to get their data when they get something in for free, right? So the reason I think a lot of these marketplaces haven't succeeded is exactly that Google giving you free search, you are happy to share a lot of data with them. But there are certainly companies, entrepreneurs trying that across the world. I'm yet to see something.
Right. Is there, final question, is there concern that there might be regulatory oversight in this space, and if that could hinder data companies?
Yes, I would say that is already happening. Right, so you already have laws coming up in Europe, in California, in a lot of places, because as a issue, this is something that is already under regulatory purview. So that's, I think, one of the reasons why a lot of companies are proactive taking steps. Because we want to keep the government out of this and let us do what we want. But yes, there is actually a lot of regulatory eyes all around the globe at this point.
All right. We can end on that note if that's okay. Thank you so much to the panel for your thoughts on a wide range of subjects within the segment, within the data sector. I'm sure a lot of entrepreneurs listening benefited from this. Thank you to the audience as well, and we'll wrap on that note. Thank you.
Thank you, Ranjani.
Thank you, Ranjani. Thanks, Anil. Thanks, Abhishek. See you guys.
Thanks.
Thank you.
Thank you very much, Ranjani, and thank you very much to all of our panelists for a very insightful discussion over there. And I believe a lot of our set of attendees have managed to gather some wonderful takeaways from another very interesting topic. Panel discussion. With that, I'm also going to urge you all to keep your tweets coming using hashtag VCC Tech Summit. So that's what we're going to do now is manage to move on to very quickly, in fact, for our next panel discussion. While we're moving forward towards our next panel discussion, once again, let me inform you all that our growth partner is Gaja Capital. And our next panel discussion actually has a very interesting topic as well, because the kind of topic we're touching is something something that's got to do with short on glamour but long on value, especially when we see how the trend of B2C tech companies have hogged the limelight, and at the same time the B2B cousins have been quietly building a more robust business as well. So let's try understanding on spotting opportunities and what are the challenges that they also face. We have an elaborate panel that's lined up for all of you, and let me take a minute to also introduce our set of speakers for all of you as well. First up, we have with us Tanmay Gopal, who's the CEO and co-founder with Hasura. In fact, as we all know, Hasura Inc., an open source cloud infrastructure company, and that eliminates the data access bottleneck for developers and teams building modern applications by providing an instant API over GraphQL and also reducing time to market by an order of magnitude. Now, before Hasura, Tanmay was also running a consulting firm helping some of the largest companies in the world transition to cloud-native architectures. We'll also be joined by Avnish Sabharwal, Managing Director, Accenture Ventures and Open Innovation. He is an innovator, strategist, and a technology evangelist with more than 25 years of extensive experience and track record around market making, growth hacking, corporate innovation, and digital transformation as well for top 500 Fortune clients. So a warm welcome to Avnish as well. Let's also move forward to introduce Sushane Chopra, who's a Senior Director, Gaja Capital. In fact, Sushane has 11 years of experience in private equity and consulting. And at Gaja Capital, Sushane co-leads firms' investments in Chumbak, Sports Village, and Baker's Circle as well. He's also worked closely with two other portfolio companies, Team Lees and John Distilleries. And prior to joining Gaja Capital, he was part of the business research team of Monitor Group. With that, let's also invite our next panelist. We have with us Kushal Nahata, co-founder and CEO of FarEye. Kushal, in fact, is passionate about using technology to solve everyday challenges pertaining to deliveries. In fact, since 2013, FarEye has been empowering the movement of multi-million-dollar deliveries, right from groceries to apparel to medical equipment to truckloads of ferroalloys with end-to-end and real-time visibility. And I think somewhere when we're talking about the movement of all of these, right from groceries and all, it's absolutely relevant and pertinent in the kind of times that we are in. Now, let me also quickly introduce our session moderator. We have with us Abhijit Singh, partner Deloitte. Abhijit leads the TMT sector for Deloitte India and has been in the financial advisory practice with over 20 years of professional experience. He specially focuses on the technology sector and has also been extensively working with investors and companies in both services as well as product segments. So, well, there you go. That's the elite set of panelists joining us. And with that, what I'm going to do is quickly hand over the session to our session moderator to get the session started for all of you. May I request Mr. Abhijit Singh to take it forward from here. Over to you, Abhijit.
Yeah, thanks, Kavya. Thanks so much. And hi, everyone. And it's a pleasure to moderate a session with such esteemed panel. So I will start with the discussions, just quickly getting a couple of quick backgrounds from each of them. I know Kavya did introduce our panels, but just would be helpful to spend 1 or 2 minutes from each of the panelists here, just to kind of get a little bit of background in terms of in the case of Tanmay and Kushal, in terms of what is the company that they have founded that they do, and also what kind of problems are they solving. Right, and then going to Avnish and Sushen as well, just to understand in terms of what is the kind of investments and what are the kind of portfolios that you guys look at, right? So just to get a broad kind of a perspective before we dive into the topic in hand, which is our B2B tech. So I'll start with Tanmay. If you want to go ahead first, quick.
Hi, hey Abhijit, thanks. Hi everybody. I'm Tanmay Gopal. I'm the CEO at Hasura. Hasura is a open source cloud infrastructure startup. This is similar to companies, if you would have heard of things like MongoDB or Kafka or even AWS. That's kind of the category of type of software that we're in. In terms of kind of understanding from a B2B SaaS point of view, it's a little bit specialized because it's B2 developers and then going into enterprise. So that's kind of the B2B-ness of the company. And in terms of SaaS, we're a specialization of SaaS, often called infrastructure as a service. And so we're in that category. Our company motion is also interesting in the fact that the B2B adoption or the B2B curve is usually kind of enterprise or SMB sale driven. This is, in our case, it's fairly organic. So it's led by a large number of developers who then introduce it into organizations and then get adoption organizations. So that's kind of the context that I'll be bringing in today, and I'm very happy to kind of share my perspectives and learn from other folks on the panel as well.
Sure. Thanks, Tanmay. Kushal, you want to go next?
Yeah, thanks, Abhijit. Hey, everyone. I'm Kushal, co-founder and CEO of FARI. We're essentially a delivery management platform helping brands and enterprises automate the entire experience from the time we order to the time we receive the goods. And I think one point, so we kind of started up in India, scale ourselves to Europe and US, and that's the regions we're kind of focusing right now. That's one, the sort of learning we had in this journey, and that's one thing I think I'll love to share with the panelists here. When you're starting enterprise SaaS, the journey of, let's say, the market you want to start with, the market you want to scale, is it that eventually you need to go US and Europe? For us today, almost 70% of our revenue is outside India, and we see that percentage further growing up. It's a enterprise heavy, so we work essentially with the Fortune 500, Fortune 1000, and that's where I think there's a very strong value of build in India and provided to the globe. That's the other perspective I think would be happy to kind of address. Yeah, I'm pretty excited for the panel. Look forward to it. Thanks, everybody.
Sure. Sushain, you want to go next?
Sure, Abhijit. As Kavya introduced, I'm a senior director at Gaja Capital. We are a leading mid-market private equity firm, and we've been making investments in the Indian ecosystem for the last 2 decades. We've got a very strong focus on backing tech and tech-enabled businesses within our focus sectors, namely consumer, education, financial services, healthcare, and domestic software. And some of our recent investments include Lead Squared, which is a sales execution SaaS company, Educational Initiatives, which is a edtech company focused on adaptive learning and assessments, and ExpressBees, which is a leading player in the e-com logistics sector in India. And we've got a great panel here. I'm really looking forward to this discussion and giving our perspective from the investor point of view.
Thanks, Suren. Avnish? Avnish, you're on mute.
Can you hear me now?
Yeah, we can hear you
now. So hi, everybody. I am Avnish Sabharwal, Managing Director of Accenture Ventures and Open Innovation Program. This is a global program running in about 15 countries. And basically, we partner, invest, and acquire B2B deep tech startups. This has been going on for the last 6 years in India, where I started it from scratch. So basically, what we do here, one is our open innovation program, where we partner with deep tech startups in a joint go-to-market, where the startup brings the platform and IP, and Accenture brings the domain expertise and client relationship. And together we go and solve tough problems for our clients, mostly in the digital transformation and what we call dev tech and cloud tech space. So that's the open innovation program. We are also big consumers of startup technology ourselves. Accenture is a big organization. In India, we have more than 200,000 people. So we are using and consuming a lot of deep tech inside Accenture as well. For example, if you want to do route optimization for our shuttles or energy optimization for our offices or cloud infrastructure, right? So we do that as well. Second, we do minority investments. So we have done about 40 odd investments. Our ticket size is $1 million to $10 million. And the thesis is strategic, not financial. So we are a very patient investor. We would like to have long-term relationship where together we can grow the startup into $1 billion business. That's our thesis as far as investment is concerned. And the last bit is around sustainability. So Accenture Ventures is deeply involved in the area of sustainability and SDGs. So we are promoting and working with a lot of startups which are solving some of the big SDG goals, the 17 SDG goals. So that's another area of focus for us. That in a nutshell is what we do in Accenture Ventures. We look forward to the discussion.
Yes, absolutely. Thanks a lot for everyone. So now, just jumping into the topic that we have on hand, right? In terms of B2B, right? And we are seeing that, with the businesses going digital and with the adoption of cloud and a whole lot of complexities coming in, right? With the business models, right? There is a need of the business or the enterprises to adopt technologies or adopt solutions, right, which are very critical for their businesses. And therefore, we are seeing a lot of interest, right, of B2B or I would say startups in the B2B space, right, creating solutions and solving problems for the enterprises and taking it to the companies, right? So I would just start with probably Sushen with you, right? So in terms of when you look at, I know you did talk about your investments in a couple of investments that you've already had, right? But how do you see vis-a-vis a B2B compared to a B2C, right? In terms of where an investor's lens, right? How do you see that? And I guess, we're talking about here a situation where, because B2C companies require, I would say, a lot of capital initially, right, to acquire customers and then scale up, right? Where in B2B, of course, the capital is required, but it's more for product creation and kind of creating the solutions. And then you have the sales engine that you need to then, get into the market. But from an investor perspective, how do you look at, the difference between a B2B and a B2C?
Sure, Abhijit. I would start off by saying that by default, building B2B businesses are slightly difficult compared to B2C businesses. You're typically trying to solve a more complicated problem. You need to have a lot of industry context, and the decision-making process is typically really long because there are multiple stakeholders. The selling process is way more complicated. So if you do a good job on all of these, right, and these problems can't be solved with capital, right? That's why you see good, successful B2B startups. Not consuming a lot of capital typically, but there's a lot of work that needs to be done in the back end to take these businesses off. And that's where the hard work needs to be done. And that's a key part of our evaluation while we look at these B2B businesses. And within the Indian ecosystem, in the first wave, we saw a lot of B2C ideas coming to the fore. And now when the ecosystem has matured, the capability set is there. A lot of people have learned the nuances of businesses. I think that's where the entrepreneurs are taking the leap and are capable of building sustainable, globally relevant B2B businesses. And in fact, we are seeing a lot of ideas coming in from entrepreneurs or teams which are part of B2C businesses, and they realize and discover certain problems that they can address for the B2B ecosystem, which they see as a problem statement within their own workspace. And that's also a theme that has played out over the last 4 to 5 years, and a lot of players we see coming on from within that theme as well.
Sure. That's helpful. Going to Avnish, in terms of the difference between B2B and B2C, but a lot of the B2B demand is also coming because of the growth in B2C, right? Because of the complexities in B2C, and then those businesses need, right, solutions which needs to be put in place, right? So we talked about, logistics and, route optimization and things like that, which you mentioned, right? And those are all more about B2C solutions issues as well, right? To get the product into the customer's hand within 2 days, within a time constrained manner, right? And things like that. But do you think that B2C, at the end of the day, the B2C is driving more of the B2B growth? And what's the complementarities between both B2C and B2B?
No, I think you have a fair point, Abhijit. So if you look at the entire startup ecosystem in India, with 10,000 odd startups, depending on whose number you are taking, 20% of all startups are consuming deep tech and B2B, right? So they are using deep tech definitely in even if it is a B2C company, they are using deep tech, right? So I think from that perspective, it is very clear. But having said that, I think B2B deep tech has found its own niche as well. So I think because of all the unicorns which are coming up, and you read about them every day now. I think in the last 6 days we had 4 coming. But the interesting thing is that no longer they are all B2C unicorns, right? So you can see a lot of them are actually B2B unicorns. Earlier you could count them in your hand. How many B2B unicorns were there, but now they are there, and even in deep tech, companies like Postman and all are coming, which I think is a great sign for a company like Hasura. Definitely in terms of what could be the scope for that kind of a company. So I think if you look at post the pandemic, especially, there has been a huge consumption as organizations have gone into this digital plus contactless model. there has been a huge demand, for deep tech, and SaaS as well. For example, if you are an offline company and you could not sell online, you could be finished during the last year, right? And organizations were trying to get into cloud desperately, who were not there, right? And then use data and AI to make sense of some of the things they wanted to do. Similarly, was the issue with collaboration technologies as well. So I think the pandemic has acted like a fuel to this whole ecosystem of B2B deep tech. So while I think B2C, yes, because of the unicorn and because of the technologies which they are trying to mix with their own technology stack is definitely a catalyst. I think on its own, B2B deep tech is poised to be a big growth enabler in India. And I think this is an area where India can probably take a lead globally. I don't think we have any chance in B2C because most of the models, I feel, and probably we are all aware, are copycat models, which we are doing in India. So there is nothing very new happening in those models. Some business model innovation, yes, but otherwise they are what they are, right? But I think if we are able to solve some big problems for India in areas around healthcare, education, sustainability, financial inclusion, that's where deep tech can make a big mark. I understand all the issues about how difficult it is to build and scale a deep tech startup. And I think last time also when we were discussing, we had that issue. I totally appreciate it. But I think India needs a lot of deep tech. And I think our startups owe it to the country to actually do that work here.
Now, we'll come to that, Avnish, absolutely. We'll do a little bit more deep dive there as well, right, in terms of the opportunities, right? So just moving on to Kushal, in terms of your business, right, and how where you look at it, right, your solutions that you're providing, right? How much of that is actually, more driven by the end B2C drive, right? In terms of, because at the end of the day, you are, providing, I know, great clientels like, Domino's and which are pure play B2C companies, right? You have those kind of companies, right? But you are kind of providing services to them, right? But then front end is B2C. But just want to understand in terms of, what is driving your businesses or the solutions that you guys have, right? From the B2C side or more from the, the enterprise side?
Correct. So look, Abhijit, maybe just to step up, maybe B2C, B2B as two separate, but look, what's fundamentally happening is, and part of it, what Avnish was also mentioning, logistics as an industry still been operating more the way it was operating in Stone Age. Highly unpredictable, super fragmented, and we were living with it. Now with e-commerce, it started pushing it that, look, we want more predictability, we want reliability, we want cost efficiency, and we want high speed, right? So I want to get products delivered same day, but I don't want to pay for delivery, and I want that at scale. And this essentially kind of changed logistic industry. B2C were at the forefront of it because customers, it's not just the cost, it's defining growth in revenue. I think one other point, Avnish, you kind of called it out, that look, if you a pure offline business, essentially maybe your business is not relevant for last 1 year, and maybe for next 12 months also it might not be relevant as well, right? So that's where the first push came. And then B2B, as these supply chain guys, they also look, when I order online, I know everything. But for my company, I don't know where my goods are. So you kind of ask yourself that, am I the oldest company living in this world or not? So I think it's happening. B2C happens to be more accelerator because the end consumers directly push them, but it's essentially followed by B2B as the next step.
Great. Yeah, absolutely. Tanmay, just a quick question with you, right? The kind of products that you make and the solutions that you provide, right? Do you believe that from a B2B perspective, right? Because you are providing services to, the enterprises who are kind of creating platforms using your, products, right? So how do you see that moving along compared to, let's say, in B2C, right? Is that, would the B2C segment will be driving more of new solutions that you would, they would need to create on your product?
Yeah, I think the underlying driver on a lot of these things is definitely kind of a acceleration of basically building digital experiences for a large number of people all over the world, right? Everybody is doing this. Everybody ultimately is needs to provide some kind of digital interface for whatever product it is, right? Like that penetration is just day on day increasing, right? We still haven't even close to saturated that globally. So the software penetration is just increasing. And I think for infrastructure companies like ours, that driver is extremely important, right? That driver of saying that enterprise and companies, SMB startups, whoever is building these digital experiences, they need better tools to be able to build faster, right? And when that's kind of where the drive is, right? They're saying that I'm a developer, I'm working here, I'm a small team, I need to build this experience, I need to build this product, and I need everything possible to make it easier for me, right? And we don't want to just be locked in into older patterns or slower ways of doing things. And that is kind of the cloud native revolution, the infrastructure revolution, the developer automation revolution, the DevOps stuff. All of these things that we've heard of in the technology world are all basically fueling this kind of drive to say build faster, ship faster, have smaller teams, right? Empower more developers so that they can build faster. So that's kind of where companies like ours fit in, because we're very, very, very abstracted away from the end user, right? Like our users are developers who are working inside LOBs or inside startups who are then building a product. That product might be a B2B product. That product might be a SaaS product. That product might be a B2C product, right? So the infrastructure companies are fairly low in that stack. But that is definitely an underlying driver for us.
Okay, sure. Just moving on in terms of the opportunity, right? In terms of what provides the opportunity on the B2B side, and probably this will open up to all of you, right? And possibly, Kushal, you did mention about, the mix in revenues that you have, right? In your company, right? So just want to understand, right? So as an Indian founder, right, creating a, B2B SaaS company, right? So how do you look at the opportunities, right? Within India and globally as well, right? Because we have seen, different experiences and across the countries, across the companies. Sorry, and Avnish did mention about, and then we'll go to him as well, right, to understand in terms of the more specific India opportunity and the this solving or the problems that needs to be solved at the India level as well, right? So how do you see when you actually started a company? How do you see the India opportunity, and then how do you see the global opportunity?
Sure, Abhijit. Look, I'm super happy with the time right now. And this essentially all of us as founders in general speak, and we feel we were kind of outside the party for a while now, and suddenly the stage has opened up. And just to give you a context, right? So initial rounds of funding we'd raised, we've raised 4 rounds till now, and I still remember the first round, the second round. 80% of time I was not explaining my product, my problem, my industry. I was explaining SaaS, B2B outcomes, and then the question would be, I think, Sushin, you mentioned that. So B2B does not, like specifically SaaS, does not need a lot of capital in context to B2C. And I know I'm generalizing it, but across, if you look at it, there's a different capital efficiency, right? So then eventually the question would come, look, you're a high gross margin business. You have 80% profitability, right? So for every dollar you make, 80 cents as your profit. You just need to invest in R&D, in making a product better and scale GTM. That you can do with that. So then what is the need of capital? And I used to ask myself every day, should I be less capital efficient to raise more money? Or these guys do not understand these SaaS. So it's evolved multifold, I would say, where we are today, where in general industry or investors kind of understand that B2B has fairly large outcomes. It's generally not winners takes all was kind of a thing, but still it's a $1 billion, $10 billion plus outcomes are fairly possible, and the capital need is also lesser. So your efficiency or from that the end game which you make, the ROI, that's also higher in that scenario. So that's one which I think has changed from, let's say, 2015 till today, where now if every investor is kind of scouting Whereas SaaS, are you at 1 million? Are you at 10 million? Are you at 25 million? Where there's a multi-X demand and supply. So like one call out I'll make even to the folks listening, if you're a SaaS founder, have some scale. I think this is one of the good times to go out and just see what's the appreciation you have out there. You raise, you don't raise, that's your choice. But it just sometimes feels good when you see folks around you kind of appreciating the work which is happening. Now, from the other point, which learning for us is, we started building in India. The challenge we had in scaling the product in India was to, one, standardization, because every single company used to work in a very, very different manner. And plus, because it was one of the first digital platforms, they essentially want everything from your platform. So it's tougher to kind of define that this is what I'll do and this is what I'll not do when you want to be a customer-centric company. So typically our negotiations with customers would be, look, give me A plus B plus C. And by the way, you do A only. And then I think we can buy the product. So it was tougher in that scenario. It helped to kind of test the product. The good thing is people are okay with some hiccups here. So, and maybe it's a tougher call out I'm making, but they know they want a lot from the platform and the scale is very, very high. So the kind of initial developments you're able to do, I think that helps a lot. Like Domino's, Abhijit called out, right? So Friday evening, Saturday evening, it's massive load. Number of deliveries Domino's does over the weekends is very, very high. Like the peaks and troughs. And then you have 80% or a large workforce, which is not permanent. So that a scale which India gets onto the platform, that's extremely valuable. And now when we go out in US and Europe, people really love the scale. The features, the depth we have in the platform, they just go crazy. That how you could handle payments and deliveries and all. And I'll just give you one feature example. So on payment space, for example, like drivers needs to collect payments, right? So the requirements we had in India was, look, it cannot be just pure digital. It can be a cash on delivery as well. It can be a split between cash and digital. Plus, the consumer might choose to pay something by Sodexo coupon. And also by that, he wants to split by 2 credit cards because each credit card gives 1 movie voucher when you spend 500, right? So this is the kind of complexity you want a driver to take care. And he is not that level, so the application should be able to address that. So this is just an example. But I think that scale you learn from India, that really helps you when you go out in US and Europe. My only call out would be the earlier you go, the better it is. Like, there is no right or wrong that you need to start or you need to go first year or second year. But if you are not cognizant, how's the market there, what's the need, it becomes very tough. Because I feel building a B2B unicorn in India is far more tough than building it in US and Europe. So just upon the path you want to choose.
Okay, sure. No, that's really helpful. Avnish, coming to you, right? And you did touch upon, the aspect about India being a market where there is enough scope and possibly opportunity for deep tech, B2B deep techs, right, to kind of create their setups. So just want to understand, how do you see that market, right, in terms of opportunity, in terms of, can companies, create solutions and then scale up within India, right, from and taking Kushal's point in terms of, being unicorns, but more, when I say Indian unicorns, of course, there is a, bit of I would say, misnomer there, because it could be an Indian unicorn, but catering to 80% of revenues outside India, right? So that's where the valuations have been driven by, right, more the growth, where the growth is coming from. But how do you see the Indian domestic market? I would say, just to be more specific, right, on the B2B a deep tech side.
Yeah, so let's be fair, and I think it's clear that it's a tough market. But if you look at some of the data, right, and it's better to, as we say, that we believe in God and everybody else has to bring data, right? So if you look at data, if you look at overall, about 10,000 startups and about 1,800 of them are deep tech now, and about 4,500 of them are B2B. A number of them have actually originated recently. And also, if you look at the survival rate of startups from the last year when pandemic hit us in March, you will find that a significant higher number of B2B startups have actually survived compared to the B2C startups, right? Then you look at the data about unicorns. If you start counting the B2B unicorns, I'm just talking about the ones which are in India, how much they are doing in outside and all that we can look into later. But you look at Innovator, for example, Glance, Postman, Zenoti, Renew Power, iCertis, High Radius, Udan, Rivigo. You can go on and on, right? So yes, they would be having some sort of business coming out of India. Some of it is coming out of global, I assume, as well. But they are all incorporated in India, most of them, and are doing reasonably good business. And the opportunity which India, I think Kushal was talking about that. I totally agree that as a B2B startup, if you are able to get your product market fit done and tackle the scale which and the complexity in that scale which India market is providing, there's a huge amount of appreciation of that when you go outside. And please also note that when you are going outside, you are also going to be competing with the big boys from day one, and there is no respite there, right? So your product needs to be matching the world standard as soon as you step out of India. In India, if there is if people are saying, well, we are not ready to pay the price, they want to pay 40% of the price, they are also expecting 60-70% of the quality at the beginning. That's not the case global, right? So if you haven't done the product market fit and you haven't got your product tested and scaled and the robustness and all those kind of things, and you go outside, yes, there is nothing that prevents you from going outside, but there are very big companies outside which you will have to compete from day one, and your product will have to stand tall in front of them. So as long as you can do that and you have the confidence, I think you should absolutely do it. I totally agree that's much more easier to scale and become a unicorn, outside India. But I've given you a significant number of data points which says that, India is giving a pretty good opportunity for B2B and especially B2B deep tech and B2B SaaS companies to grow their businesses. I think Tanmay was talking about the digitalization, right? Only 30% of the Indian corporations at the moment you can talk about digitalization are digitalized. So there is a huge opportunity. And what they would have done in the next 10 years, they are expected to do in the next, maybe 1 or 2 years because of the pandemic, right? So all that is creating the opportunity. There is no right or wrong answer. I totally believe that, opportunities are in both India and abroad, and it depends upon, I think, your particular startup, your particular situation, and obviously the team which you have, whether you feel that, it's the India is the better opportunity or global is a better opportunity. I agree with Kushal that, product market fit and early scale can be done in India, and then you should go out. But again, no right or wrong answer.
No, sure, Avnish. Shashank, I was just coming to you as well.
Yeah, Abhijit. So just to bring a bit more perspective. So, we track the sector closely, especially in the focus clusters we have. And if I look at the overall market, let's say the IT spending within India, close to $100 billion, that same market in the US will be 10 to 12x of the size, right? So it's really important that when you start building a solution, if you're really looking for scale, you should build it for the global market. And as Avnish rightly pointed out, some solutions may work in India because people don't pay you as much. They don't expect as much of an output or as high quality an output. In which case also, by the way, some models work. They'll end up going to a Southeast Asian country, which may have similar dynamics. But if you're targeting a market like the US or Europe not as exciting because it's broken into multiple markets, but certainly US, you have to make sure that your product early enough has a fit with the global markets, right? And within the small portion of SaaS, which is, let's say today, $3 to $4 billion, I think that's the really exciting part where people, we used to think it'll take 5 to 6 years for that to scale 5x from here, become a $20 billion market. Post the pandemic, there's been a lot of adoption. And people are saying this will be done in the next 2 to 3 years, right? So a market which was already very exciting, the dynamics have changed even more in the favor of some of these models. Within the clusters we track and the scale that we get excited at, which is, let's say, a $10 million ARR. I think, Tanmay, Kushal, you kind of raised that point. That's the scale where things start to get exciting. The business model is validated. You can really see a scalable solution. 5 years ago, there were 40 to 50 companies at that scale, and that's moved to like a 250 to 300 number. So it's really seen a adoption which has been broad-based solutions focused on sectors or functions. We've seen both kind of models. And some of the unicorns Avnish spoke about, again, span the breadth of this, right? There are solutions focused on specific sectors such as hospitality, BFSI, or they could be focused on CRM, analytics, payments, right? One thing where India is really evolving is that a lot of the historical, the older companies which came out of the ecosystem were really focused on the business improvement kind of solutions, right? Whether it's productivity enhancement, process automation, etc. And what was lacking was the deep tech part of it, right? Business models which had artificial intelligence, machine learning at their core, and something which was unique at a global level. I think we're seeing a lot more of those, and they're evolving from a niche to a much more scalable mainstream product. Like Kushal said, people now understand it. You don't have to explain a lot of it to people, right? I think that's the equally exciting part for the Indian ecosystem. Yeah.
No, absolutely, Sriram. That's really helpful. And just to summarize, I think what I understood from catering solutions to India and taking it abroad, just like we say, right? If you can drive on Indian roads, you can drive anywhere else, right? So if you have the ability and the product, right, which you can navigate through the Indian roads, then it's probably driving through the US and other roads is much easier. But of course, as Avnish mentioned, right, in terms of the competition, there is a different, a kettle of fish, right? You're talking to, and just like, and yesterday's announcement of Microsoft's acquisition, right, of a $19 billion of a healthcare tech company, right, which is deep verticalization, right, where they're going into a deep verticalization in the healthcare sector, right?
Right.
So I just come to Tanmay, right, taking that along, right? So is this the, I would say, the Y2K moment for B2B, right, for India in terms of, because, the 2000 was a, kind of a, watershed year for India, right, for the IT sector as such, right? Post that, it's all the, growth of the IT services came in, and suddenly India was looked as an offshore, right, kind of a service. But at least I can tell you, right, the deals that we are looking at and working on, right, it's now less of any cost arbitrage, it's more about talent arbitrage, right, in terms of, what is that the digital capabilities or the capabilities in terms of services can they bring in, right? So you work a lot with developers, you work a lot with, guys who use your product, right? So how do you see this? Will India this be the Y2K moment and kind of, be the, I would say, as Sushain talked about, the opportunity, just possibly scratching the surface now, right? And this is possibly going to go much bigger, right? And that too in a much shorter period as well, right?
No, that's a very interesting question. I have a slightly different take from what we've discussed so far because of the space that we're in. And I have a lot of frustration with the ecosystem in India, because I remember, after I graduated I did my computer science degree from IIT Madras. I did my bachelor's and master's there, and I remember everybody telling me, and I wanted to start up, and I remember everybody telling me that if you want to do deep tech, please go to the Valley. What are you doing here? So I said, "Nahin, मैं तो start हूँ, मैं India में करूँगा." Right? And I said this, and I remember, I'm exaggerating a little bit from a storytelling point of view, right? But I was just like, no, I will do it from here. I will change developer infrastructure for the world, and I will ensure that the trajectory that we are on, from going to 30 million developers, going to 300 million developers, I will build that company out of India, and I'll do it here. And the amount of time that I wasted was spectacular. And for a variety of reasons, right? And I think that, like Kushal was saying, like, to explain what SaaS is to investors, we are a specialization of SaaS in a playbook that maybe 10 companies in the world have. There's no playbook even. There's 10 companies in the world who've done this maybe. So it's impossible to explain. I went to top tier VCs where people are like, "Oh, Hasura, I thought you're a food tech startup." I'm like, what? What is this professionalism that you have as an investor? Don't you read up on the company that you invite to talk to you? Like, who? I mean, I was completely just shocked, right? And then from the market point of view as well, like Sushain said, right, the market in the US is just very, very large. What that means is that early adoption of the product that you have is very rapid. Like in mature markets, especially in the B2B space, and in the enterprise space, people only care about productivity. They only care about ROI. There is nothing else involved, right? It is extremely meritocratic. So people only care about ROI. In fact, if you go to mature markets and you sell a product, and if you have 10 features, people want one feature. And they want that one feature to work extremely well. Whereas India sometimes has a slightly, the mentality is a little bit different. It's like saying, how can I pay the least amount of money, but get you to do 20 features? This trajectory of product building from a founder point of view is death, right? Because if you start moving towards building something with too many features at a lower price point, that is not good. That's not going to help long term. You're not going to be able to build a differentiated company, right? It'll come from the other side where you specialize on one particular thing. You're able to monetize that. You're able to prove business impact from that, and then later on diversify from that initial thing that you started. Now, for doing this, you need a mature market, right? The more mature a market is, the better you can do the early stage kind of shenanigans, right? So if we translate that to kind of the India opportunity, right? I think the great thing about where we are today is, I think we're still very, very young as an ecosystem in the B2B space. We're far away from being a global leader. But the early signs that are really good here is that, one, especially the B2B ecosystem that I am in, right? It's an extremely meritocratic system. So that means that the playbook is actually really simple. If you want to make it as a product in this B2B SaaS infrastructure, developer tools type space, there's only one thing that you need to start with: the best product. You need to focus only on one thing. You need to focus on saying, if this is the problem that I'm solving for this particular segment, am I the best product or not? That's all you need to do. You need to start off by saying, am I the best product in the world? Not best product anywhere else. Am I the best product for this problem and this segment? So you can say SMB, you can say enterprise, you can carve it out. You can carve out whatever segment you want to go for. Maybe it's a crowded market, maybe it's not, maybe it's a new market, but all you really need is the best product. Once you get started with the best product, you will be able to get you'll be able to get kind of the early wheels kind of moving, right? And from there, the trajectory is reasonably, I won't say straightforward. I mean, it's always very, very hard, but that's a starting point. Now the India opportunity in creating the best product is basically saying that, and there are initial advantages here, right? Like, for example, if you look at the early stage of product development, the same amount of capital can allow you a lot more experimentation while you're in India. And at the same time, India has the benefit of being, reasonably open to the rest of the world, where, everybody's English speaking, for example. That goes a long way, right? When you're competing in, like, with the global players, you're saying, I'm going to build the best product in the world. All your entire company and everybody needs to be global facing, right? And there is a talent advantage to India, right? There's a good amount of IC talent here. We, unlike other developing countries, right? Our opportunity is much higher because of that improved talent, because of English speaking and things like that. But that said, I mean, there are lots of challenges, of course. But there's a tremendous opportunity for that early stage development and building product, just given the amount of talent and the exposure that we have to build these things. So I feel like there is a good opportunity there, but we have to be very careful, both as founders and investors, to be able to nurture that opportunity and take it forward, right?
Yeah, no, absolutely. And I'll just take on from there to Kushal, right? So from you founded the company, and it's been a couple of years that, this has been on a growth path, right? So just want to understand in terms of, the challenges and the, I would say, the life cycle, right? As you grow along, and Tanmay did mention, right, about creating the products first. So in terms of, making sure that, what the customer needs, you have that, and continuing to kind of, redesign your products, right, to meet the requirements, right? So, but in terms of, I would say, the challenges of a growth, A, and B, in terms of in the B2B segment, right? How do you see, companies failing, or what type of companies tend to fail, right? So because that would be something which, as a founder, you would always be kind of facing every day, newer aspects. But what are those aspects which you have to take on, you have to take head on to manage the business?
Sure, Abhijit. Great call out. So look, one thing probably I'll add, for us, the way it happened and worked for us, when we were initial years, we were very clear that, look, India would not help us build a profitable, scalable business, but it's a market will help us problem and scale. So you kind of focus on that and not on profitability a lot, because the moment you start for a higher deal value, higher profitability, you get into the breadth, and that's when your product prioritization kind of starts getting tougher. The other thing which was interesting for us is, as you build the GTM team in US and Europe, it's a very different motion, the entire sales motion, compared to in India, where you don't need to do multiple things. I'll kind of echo with what Tanmay was mentioning earlier. These are the few things we do, but we do really well. You have a very clear problem statement. For whom are you solving? And this is the ROI. And these are the three options, and this is how you're better. You need that playbook very, very clear when you're going in, specifically developed markets, be it US, Australia, or other regions as well. I think the difference still, just to give a contrast, in India, you can still prey on price and inferior quality. I think that still does not become a big criteria, at least what we've seen in developed market. Like, because it's a lower price, I don't want to buy an inferior product. It's actually a little opposite. We want to buy a better product and happy to pay an additional price for it. I think somewhere it becomes a productivity, cost of resource, availability of resource, multiple factors which kind of builds that as well. So for us, building that GTM somewhere became kind of changing the organization culture as well. In terms of commitment, in terms of adherence to commitments, in terms of quality, a lot of it was getting into few notches above than what you were playing.
Yeah.
That was one. And then also more from the other element I would say is somewhere we tend to not use no a lot in the Indian context or with the customers. I think that becomes a lot more simple and clear. We can't do it. It'll not be delivered in this quarter, and it's okay. It doesn't mean that anything happens wrong when you kind of use that word. I think here it was a little tougher for us. Like the way we call it out, and I'm sure Avnish would not like it, but we call it a 3 sales process in India. First sales process is selling, second sales process is delivering, and third sales process is collecting the payments. So it's kind of a 3 sales process which you're kind of running, because every time there is some negotiation which is happening. It's not that clear cut out. So I think that changing, and you built a team which can walk on those negotiations, right? So they can think very fast, they can take decisions on the field. And now you want to change to a more developed, so that was one more or less changing the overall. I think the good thing that happened for us was the interest and excitement of global investors for India B2B or India SaaS is actually very, very high. Because everyone understands, I think some of that credit goes to, I would say, the services era that we kind of built in, the Infosys, Wipro, TCS and all, where we kind of learned that. And then the other also from a B2C perspective. So the combination of that is what you're getting into the next B2B SaaS, because you started that game very late. So that is attracting a lot of investors' interest, and maybe not for an entire B2B, but for SaaS, it becomes a very, very decent playbook. Like there are 5 metrics you need to track where you are. It's like COGS, your growth rate, net revenue retention. These are top 5 metrics. That's all what you want to track. What is a top 1 percentile company, where you are. So even for investors, like I don't know how is the B2C investment process running, not being part of either side. For B2B, most of them, like the folks we engage in US and specifically in US, it's almost like a few hours conversation only. What are your metrics? What's the trend? Here's a model I'll input that Excel into. Here's the output I will get. And that tells me across about company efficiency. The only thing I need to put up is TAM. If the TAM is decent and you're doing good, I think there's a decision out there. So overall, I think SaaS has become more of a very seasoned playbook. And you can learn a lot from the ecosystem, which is built and created those compared to, I think, B2C in general. So those are a few things I'll call out. Like there's a lot to learn, very, very defined playbook. There's a very low experimentation out there. One other call out I'll have is we're seeing some startups kind of stuck between 10, 25 as a journey, like the mid stage and not able to go at the top. That's where I'll probably add to what we all were saying in different shape and form, that you need to be cognizant. How will you make it a large outcome? You don't do it today, do it tomorrow, but that site is important. Otherwise, it gets tough because then the product development needs to be redone and becomes very, very challenging.
Just to add to that point, Kushal, I mean, that has to be done early enough. We've been discussing that, how you should build for the global market, but you have to do it at a very early stage. Like Tanmay also mentioned, what kind of solution you are building out really is at the starting point, right? And the second thing I want to say, and that's where we focus a lot with our portfolio companies within this space, is building an effective enterprise sales engine, right? We have a great pool of developers, SaaS developers or software developers in general. I think on the sales side is where a lot of companies struggle. And that's the other enterprise sales engine where we have to build it early enough. And a very different process for global markets. You have to get in global talent. You have to pay them well. It's a very, very different kind of a dynamic. So I think these are the two areas: focusing on global markets early enough and building an effective enterprise sales engine. I think these are the two areas where we focus very closely with our portfolio companies.
No, Sushant, that I was just in fact coming to you as well, right? To discuss when you look at an investor perspective, right? And probably from a, you have invested in a couple of B2B SaaS companies, right? And probably as Kushal mentioned, I think it's an easy sell to overseas investors, and at least we have seen all the large ticket investments being more, coming in on the SaaS side from more of the US funds or the, external international funds, and less yet from the Indian Ps, right? They're more, right? Still not focusing on that yet, but you guys have already started it, right? So how did you, or what do you look at, right, from a investment perspective, just for the founders who are listening to this, webinar, right? Just to understand what kind of, playbook and what kind of platforms do you look at, and what are the key things that you would, want to know, right, from the founders, or how they want to establish the company.
Sure. So one of the first basic things or distinctions we have to make at our end through our analysis, Abhijit, is to see whether it's actually a software business or a software-driven high-margin services business, right? Because either could be disguised, as a software business. And a lot of the times we see models which are not really software businesses, but they are very high-margin businesses to which software and tech has a very strong backend. And you deep down then in your analysis realize that these are not really scalable. These are solutions which are being customized. These are very specific ones. And you'll have to go on through the same cycle again and again. So that's the first distinction we have to make. And obviously the software-driven businesses, you see better margins, more scalability. Those are the ones that really kind of get our attention, right? And because a B2B model has to be built with a very strong core, whether it's a kernel of anchor customers or very strong use cases in certain applications. So that's the basic idea that, we focus on, that what have you achieved at this scale that we can see going to $100 million ARR, right? For us as a mid-market firm, $5 to $10 million ARR is where a lot of the questions which are existential in nature, right, get answered. It's really about how do I grow at 10x over the next 5 years, right? And that's where your existing solution, your customer satisfaction, evidence of winning contracts from global counterparts, and there have been evidences of that across industries, where we've seen people using globally relevant solutions within India, but Indian companies have replaced them with better metrics across the board, right? The solution would be better. There'll be a greater relationship building with the client. They'll be more responsive. They'll be more nimble, right? And then obviously on the cost front also, things typically do work out, right? So that's the other thing where we've focused a lot. And then obviously there are a bunch of other metrics, whether it's the ARPA growth with the existing clients, stickiness with the clients is a big thing to have. Sales productivity, a very key thing to measure. It may not be very relevant at this scale, like we said. It's typically the models are capital efficient, but if there is any efficiency at this scale, it really shows up once you go to a 10x ARR. That's where things break down.
Absolutely. Yeah.
So one is at a high level, seeing how relevant the solution is, how your customers are happy, which kind of global counterparts you've displaced, and then these bunch of other in-depth metrics that we typically are relevant for B2B businesses and SaaS businesses in general. I think those are key to our analysis to figuring out an attractive model within the space.
Yeah, Abhijit, maybe I'll just add one thing. I think the revenue retention or the customer retention or the revenue growth, I think this happens to be key at every stage when investors kind of looking at it. It's basically that do you have a hole in that bucket or not, and how big is that hole? Because if there's no hole, it kind of proves for product, it kind of proves for space, the segment you are playing in. If it's a large hole, then either your product is bad or the support is bad. So essentially, I think that becomes one of the biggest metrics when we've engaged. And investors or in general, folks want to super deep dive. How is your revenue retention? And then you do cohorts, you do segments, there are different shapes and forms to plot it out. But that becomes one of a very, very important metrics from a SaaS and B2B. Because essentially your cost of acquisition is high. If you can retain that business for a long time, then I think overall you're in a very, very good space. Because then as you accelerate your GTM, you would become a large business.
Yeah.
Right. And it's not unheard of, having 200% retention rates where you've doubled with your customers over a year, right? So that's the really exciting part of this whole B2B model.
No, absolutely. That's really helpful. Avnish, I guess we are at the end of the time that we are reaching, but I just want to go to you, right? So you have been working in this space for quite a bit while, right? And especially looking at deep tech and so from your perspective and from your experience, what do you believe are the 3-4, key areas of, frontiers, I would say, right? Of an opportunity perspective on the B2B deep tech side, right? Both India and overseas, right? From a solution. So, and what are the areas, and what would you what would be your advice to the founders who are setting up their, shop or trying to get into this and are at very early stage?
Yeah, so I think from an Accenture perspective, the way we are looking at, if you're looking at from just an investment hat, right, that we invest in startups which are solving very tough problems for our clients and have the ability to disrupt multiple industries, right? So that is the number one criteria which we have. And when we look at, for example, what are these tough problems? I can give you a few examples. For example, closing the skills and talent gap. Right, and everybody is actually wrestling with that. We have invested in a startup called Skyhive in Canada, which is actually helping us do that. The second one is, for example, delivering trust in data. Again, a big problem which most of the organizations are looking at. We have invested in a startup called In Country to help us look into that. Supply chain resilience, we have invested in a startup called Reactive. Right, you look at edge systems at scale. We have invested in a startup called Synedia. These are what we call the tough problems, right? Which the world is grappling with. They are frontier problems where we think that the startups and Accenture can work together. So that's our first criteria. The second is that if Accenture provides not only investment, but expertise and access as well, right? So if we provide expertise from Accenture Labs, for example, Accenture, centers of excellence, and also access to Fortune 500 companies, does the startup have the ability to become $1 billion company along with Accenture? Right? That would be our second criteria and looking at where we want to invest. The third bit is about obviously the execution part of the startup as well, right? So we want to make sure Accenture is high performance delivered. Everybody knows that, right? So we need to align the startup DNA to that as well. Do they have an execution and delivery DNA or not? Because a lot of these startups great in innovation. But when you are talking about, working with Accenture and our clients across geographies and across functions, you need a delivery and execution DNA as well, where most of them fail. And that's where it comes again that are you ready to go to our global Accenture Global Fortune 10 client from day one? Probably not, right? And that we would probably not take you there as well. And the last bit is to look at the entrepreneur. Definitely. So, that's a very important thing for us, that more than the startup product and the idea, it is the faith in the entrepreneur, herself or himself, which becomes very critical for us. So these are some of the things which we look at now in terms of the growth priorities. I think we are not very different from others. One of the big growth priority is cloud for us. I think that's going to continue for some time. So cloud, edge computing, green cloud, sustainable cloud. All these areas are big for us where we are investing. I think every week we acquire one particular company in this space. We have just announced a $3 billion investment in Cloud First, which is one of our initiatives. And we are already at $10-12 business business or revenue in cloud, right? So cloud, data, AI, these are big things for us to be there. And from a sector perspective, we are pretty sector agnostic. So we are operating in most of the industries. But I think, there are very critical areas which I have talked about, which make our decision in terms of how we evaluate a particular company to invest in. And I guess, that's most important. In terms of, ultimately, we are a digital and a technology and a consulting company, right? So we want to invest and partner with startups which complement us.
Sure, Avnish. Thanks a lot. I guess, I'm getting reminders too, given we have overshot the time that was allotted for this session, right? Now thanks a lot to the esteemed panel, right? Tanmay, Kushal, Sushain, Avnish, right? For great views, right? And we can bring the session to an end, right? But before that, in any closing remarks in terms of quick, but I guess we don't have time. I think we were getting pinged. But it was great to kind of, connect up with everyone and get your perspective on this segment. And my view is that, this is just scratching the surface, right? The B2B side, and India, it is a somewhat a Y2K moment for India. I think we will see many more, a lot of companies getting founded from India, but solving the problems of the globally, right? Of the world, and thereby, taking the companies outside India to global markets as well. So thanks a lot. Thanks a lot for your views.
Thank you, Abhijit.
Yeah.
Thanks for hosting, Abhijit. Thanks.
I think it's the time to buy, build, or invest in SaaS. That's the time to that.
Thank you very much, Abhijit, and thank you indeed to all of our panelists. We managed to gather some amazing food for thought from all of you. What an interesting topic, and an even interesting set of panelists joining in for that lucid discussion, if I may put it. I think I was absolutely hooked. So yes, I do believe we managed to go a little over time, but I think it was totally worth it. I believe you all managed to gather some wonderful takeaways from this session as well. On that note, if you did, please do tweet using hashtag VCC Tech Summit. But with that, attendees, in a way, we do come to the end of the summit itself. We've managed to gather some wonderful insights, some perspectives, as well as nuggets of thoughts from all of our speakers, paving way for what's in store for the future. And at the same time, I'd like to take the opportunity to thank Gaja Capital as our growth partner. And this was our debut edition, and I do believe that you all had some wonderful learnings and some interesting decisions from these sessions. So with that, I am Kavya R. Chavli, and it's time for me to sign off. And I wish you all a great week ahead. Most importantly, stay safe and take care. See you around in the next edition.